everyone, ladies and gentlemen. I'm delighted to welcome you here on the occasion of the second meeting of the H2A, and I'm greeting you warmly today. I'm very happy of the success of our annual meeting, which brings together more than 400 people this year: magistrates, statutory auditors, third parties, sustainability auditors, representatives of the professional bodies, lawyers, companies, audit committees, as well as our foreign counterparts in charge of the supervisions of the statutory auditing functions elsewhere in other countries. The wealth and richness of our audience today is just like what brings us together. Before we start this meeting, I would like to thank warmly Mr. Philippe Vincent, who is the chairman of the National Company of the Statutory Auditors, and also to welcome Mr. Levenové, who is the chairman of the National Company of the Chartered Accountants. And I want also to pay tribute to the members of the college and a member of the committee for the sanctions of the H2A, the representative of the Ministry for the Ecological Transition, and representative of the Civil Affairs, and the keepers of the seals at the Ministry of Justice, and also the professional school for the lawyers, dear Gilles, for the Paris district, but also the dear president of for the different regions of France with a different dress code, and also the different members of the representatives of the national members of the lawyers and Accountancy Europe, and the representatives of the Veritas certifications consultancy, and also CaliConsul. So I am also, of course, very honored to welcome amongst Mrs. Bénédicte Vessier, our counterpart in Belgium, who is a chairwoman for our counterpart body for the regulation of statutory auditors in Belgium, and I'm very happy to welcome her here, and thus providing a true European nature and status to our meeting, and also to pay tribute to our counterpart in Switzerland, who is with us remotely. And I want also to thank all the participants, all the stakeholders who will be taking part to different roundtables we shall have this afternoon. Ladies and gentlemen, on January the 1st, 2024, the H2A succeeded to the higher console to the statutory auditing according to the decree of the decree that was taken in 2003 with regard to the CSRD transposition. Our mission is to supervise and to provide regulation to statutory auditors looking at the CSRD criteria on top of the traditional missions provided by statutory auditors. For the second meeting of the H2A, the theme, of course, is obvious: implementation of CSRD and the first outcome and the potential pathway for the future. It seems important for us to contribute to the thoughts and learnings also of the first year of implementation and the future outlook. So these meetings are within a changing context anchored by the omnibus package, which will reshape the regulatory and legal framework at the European level. During the past year, strong mobilization and involvement of all the stakeholders was present. Professionals, companies, but also regulating bodies, so as to respond to these new stakes and challenges ahead of us in order to secure the exercise of mission. The H3C and then this successor, the H2A, have provided guidelines and technical viewpoints and recommendations so as that each one of us and also controllers can apprehend better the scope and the very nature of the work expected by these authorities. There's also now a scientific committee to conduct and to respond to the habilitation request and certification request of the said professionals. To the date, 14 training bodies have been certified by the college. Ladies and gentlemen, dear professionals, you're numerous today to have prepared yourself to certify the information sustainability information to date. 2,762 statutory auditors and 17 sustainability auditors have secured and these training and are now listed. 11 OTI have been accredited. That's training bodies by the COFRAC, national certification body. Numerous of you have started the certification process with the more than 1,500 employees, companies, and reports, and now finalized. The H2A has in 2024 carried out the very first controls pertaining to the in-house controls for 2 third-party countries in 2025. This control will be widened to the very missions themselves so as to identify the curbs and difficulties met during the certification processes and so as to feed an improvement, continuous dynamism. Each one of us here and each one of you will agree that CSRD is not a pure regulatory change. It has also led to a new and complex framework leading to a very demanding change in practices, reshaping the very roles within the ecosystem of the sustainability information management. It was a very dense year, sometimes very difficult. European texts and directives are new. The reporting framework is both technical and ambitious, and the publishing by the European Commission arrived at a late date, only a few months before the implementation of the French text. And this, of course, is a huge improvement with regard to previous regulations. The H2A was there to provide a new dialogue between the different CSR management bodies and the controllers. The college and myself are convinced that such a change when it comes to the diminution of the CSR information can only be done within the remit and the framework of a continuous improvement process, which will be done in time thanks to the experience, the exchange, and the ownership of these practices. We are all convinced that it is, of course, necessary to provide companies and their stakeholders the necessary CSRD tools and CSR tools which are balanced and useful for each of the stakeholders. With these objectives in mind, so as to simplify and to find relevant information, the Omnibus package aiming at recalibrate some obligations due to the CSRD and CS3D, as well as the text pertaining to the green taxonomy, has been presented on February 26 by the European Commission and has been approved by the European Council, then by the European Parliament on April the 3rd. Omnibus is leading to a change in the time frame and a change also in the method that is being used. It also plans with the time to clock directive for some forwarding of some obligations and also a change within the scope of the obligation and also softening on the value chain and simplification of the compulsory declaration and statement. Recently, the European Council has agreed on the different taxation level of the companies, thus reducing the numbers of the companies to the set companies that are obliged to do some these reporting. Now it's only 1,000 employees. The text will be examined by the European Parliament in October, the objective being to adopt a new modifications of the directive by beginning of 2026. What was an execution phase only a few months ago is now being redefined, actually. The H2A is fully mobilized so as to think thoroughly and to help the two ministries in charge of these affairs, i.e. the Ministry of Economy and Finance and the Ministry of Justice. And our role is unchanged. We must make sure that the said obligation, both current and to come, pertaining to the information that are published today and in the future can be understandable and lead to truthful information that can be audited and that the implementation is done in a realistic viewpoint for the professionals. Therefore, we want to be able to respond to the missions given to us by the lawmakers. The trust of the audience and on the investors as well lies also on these investments. The challenges ahead are numerous, so please be sure that the college and I will make sure, as just as well as the 70 collaborators of the H2A will respond with the same integrity, same demanding criteria, really. So I wish you a very fruitful afternoon, and thank you very much for listening to me. So I shall now leave the floor to Eric Baudrier, who is the General Director of the H2A. So thank you very much. Indeed, we shall start with the first roundtable and shall invite the participants of this very first roundtable to join me on stage. So we shall provide you with some figures in the meantime while they are coming on scene so as to illustrate this first year of CSRD. And the first roundtable will talk about the different appointments that were made. As you may know, I guess, the companies today have the choice have the choice to appoint either certified statutory auditors to certify the information in terms of sustainability, so more than 2,600 so far. And there's also 11 independent third-party organisms which have been certified by the COFRAC, which is a certifying body in France. And there are 17 people are certified so as to sign the reports in terms of sustainability. When looking more precisely who has been appointed in this very first wave, so to speak, on the sample which is not fully representative, but these are the biggest 111 listed companies in France with subject to CSRD. We can see that an important part was made and given to the statutory auditors who are already working there since 83% have chosen their statutory accounts when they had only one, or two statutory auditors when they had two, actually. This being said, 17% of these said listed companies have made another choice, i.e. to work with a third party, third controller, and also to work with one statutory auditors and a third party which would be controlling as well. In terms of co-insurance, which is optional, as you may know, pertaining to the certifications of CSR information. Out of the 111 listed companies, 44% of the said companies have chosen actually to keep the co-insurance. And these are usually subject to co-audits, and therefore to have both statutory auditors, and therefore voluntarily have chosen to do the same. With regards to the honorarium now, the sample is smaller because not all the companies were fully transparent when it comes to the sustainability honorarium. Only 71 companies have responded. So the area is anything between 5% and 50% of the blue account. There were some discrepancies, actually, but for most of the honorarium, anything between 5 and 10% of the honorarium that is usually charged for the said blue certification. So for our very first roundtable pertaining to the very first appointment that were made, it is my pleasure actually to welcome here on stage. I want to thank them because they're actually in the right order that it can be seen actually on the slide. So thank you very much for doing so. So first of all, I want to welcome Marie-Hélène Rigal. Thank you very much. You are administrator of Soprasteria, so you're actually nearby because Soprasteria is a nearby tower here. and also a member of the Audit Committee of 74 Software, President of the Audit Committee of the EFR. Mrs. Sonia Bonnet-Bernard, you are an independent administrator, and you're also President of the Audit Committee of the Crédit Agricole, and a member of the Risk Committee of Rémy Cointreau. And Mr. Elman Lepas de Sécheval, your General Secretary and Secretary for the Board of Veolia, Co-President of the Audit Committee of the EFR, which is the French Committee of the Administrators. So thank you very much for providing us with your lights and thoughts so as to answer the questions we may have pertaining to the very first appointments. So I shall actually ask the very first question. So what about the process when it comes to the appointments for the sustainability criteria? So which choices have you made, actually? So thank you very much for inviting me on this very first question. So I wouldn't have thought I would need actually to make a call for tender on this topic, because I thought it would be very easy, because of course I think we would actually work with our College of Statutory Auditors, but that was not the opinion of our co-administrators, who actually wanted to open up the process, not only for matters of skills, of competencies. I do not think so. I have actually myself, I've been trained for 90 hours on the CSRD issue, and I think we are fully skilled to do so. But in order to have and to understand all the different approaches that can be proposed, when in the real world things were not as simple. It is a very complex and very regulated work, and also in very international work, so it is very difficult to find people outside the main auditing companies, of course. And the previous statutory auditors, the current and future statutory auditors, have been actually approached. Not all of them have responded. And finally, the College of the Statutory Auditors was chosen at the end of the day. And anyway, we've really wanted to open up, and we found some third-party companies which were not members of the profession that could respond. One declined, half the other responded, but actually they were not very convincing. And hence we decided to choose a statutory auditor, which is not the current statutory auditors we work with usually. So when it comes to the process of the appointment, what actually took at least a month, anything between a month and 2 months, with very precise questions which were forwarded to the short list of selected people. It was not a proper call for tender. It was not really open to the public at large, because we selected only a very few people or structures that could respond, and also an access to management so as to precise the number of responses. And afterwards, that led to a different analyses that were actually pretty thorough, made by the audit committee.
Thank you very much.
Alors moi, j'ai deux cas très différents. Un qui est assez classique, si je puis dire. Donc, je me remets en 2000.
Back in 2024, in fact, back in 2024, we know that the board of the statutory auditors, i.e. the two financial regulators, had their terms come up in 2025, sorry. One of the statutory auditor is a third-party independent organization for the non-financial performance reporter, and the other one was embarked on a financial growth operation. So what was suggested was not to engage in a call for tenders, to appoint the first one for a one-year term, and we decided to have the board of the statutory auditors as the green auditor. The second case was a different one. The company wanted to send a call for tenders, which was jointly headed by the Finance Department and the Sustainability Department, knowing that the Sustainability Department has been organized and well structured for a number of years with very advanced skills and competencies and expertise area. So what was decided was that the Sustainability Department should suggest the appointment of 2 independent third-party organizations, with the Finance Department suggesting 2 statutory auditors. The 2 independent third-party organizations were well known. They were pioneers in sustainability issues. They were specialized organizations, especially non-financial auditing work. And one of them, in fact, happened to be soon part of a large auditing firm, which was to become, back in 2024, the new statutory auditors for the company, one of the 2 new statutory auditors. So in late 2022, early 2023, we had launched a call for tenders for the statutory auditors. And the 2 auditors which were suggested was the one which was a member of the board, and another one which was not the current statutory auditor, knowing that the outgoing auditor left their engagement because they already had a 24-year engagement and would not apply for becoming a green auditor because there were concerns of conflict of interest because the 2 blue and green auditors had joint interests. So basically, I'm telling all this because this was quite a special situation, and the result could be very different, very atypical. So the goal of this process was to appoint to engage to appoint a professional for 3 years, and a stringent call for tenders was put together, similar to that for the statutory auditors, knowing that the lead time were very short, and the audit committee discussions with a view to recommend an appointment to the board was done at the time when the financial statements were prepared. So at Veolia, what is the process? Well, apologies. My conclusion is that at the end of the day, sometimes you have a group of the current statutory auditor and the independent third-party organization serving as the green auditor. In Veolia, we started with an idea that we would be using the DPEF auditing work. In the first 2 years of the DPEF reporting, we called on an independent third-party organization, a so-called OTI in French. The cost was very high, and we weren't very happy with the work done. And after 2 years, one of the statutory auditors came up with a proposal with half the price. We wondered whether the quality would be the same, and based on experience, their quality was much higher for half the price. Based on this experience, knowing that a call for tenders is there to give you the best value for money. Now, we had no idea what the price would be. As the chairperson said, CSRD is not just a regulatory change. It was a totally different thing. There was no price on this before. We didn't know what the price would be. So the preconceived idea was that we were having the feeling that the large auditing firms with a presence in 55 countries, auditing large international corporations, had made major investments materially and immaterially in all these issues in non-financial information reporting, among others. So this is how we started, the idea being to only appoint one of them. But because it was a new process, we decided to do things very openly. We decided to conduct interviews with our 2 statutory auditors. We interviewed other statutory auditors, and we interviewed other independent third-party organizations. And at the end of the day, one of the currently serving statutory auditors came up with the best proposal. Based on lengthy discussions at the audit committee level, it was considered that because the value for money equation was good, why could we not have this second party become a member of the group? And similar to what happened with Maryland, one of the 2 currently serving statutory auditor had its term expiring after 24 years of service, and knowing that the statutory auditors who responded to our bids with a proposal, and that regulation authorized that we could organize a shorter terms of office over a transitional period. And after 1 year's period, we removed the former statutory auditor and appointed a new statutory auditor. And this was submitted to the shareholders meeting, which approved that. And we are quite happy with this choice. Thank you. So at the end of the day, so different situations with different results. In one case, you have one statutory auditor and one OTI, independent third-party organization, with a very large consultation process covering both OTI, independent professionals, and statutory auditors. Now, my question is, which criteria did you use to proceed with your process and your assessment and your decision making? When you engage in a call for tenders, the criteria are really the same when you want to appoint a statutory auditor and a sustainability auditor. Now, in the present situation, as there were new services to be provided, there were stakes and challenges which were slightly different. I told you about the price. So for statutory auditors, the prices are very visible, are very public, with lots of comparable criteria, with a very public, very visible set of criteria. But this was a different story. We didn't know where we were going, and this basically was a question of discovering what the market price would be. And technicality was a key criterion, extremely key criterion. Technicality, as I said earlier, we had the feeling that producing sets of financial statements is something which has been done by statutory auditors based on professional standards of a very considerable level. Information data is auditable, is reliable, is trackable, is traceable with software program, with AI solutions supporting all this process. But it's a different story with non-financial information, with a mix of social information, environmental information, lots of estimates, with lots of different criteria, scope 2, scope 3, greenhouse gas emissions, CO2 emissions, all this, doing a mixed bag. So basically, if we wanted to have a very high quality sets of information which would be of the same high level of quality compared with financial information, we needed to use professionals with the same standards and the same expertise as for financial reporting. The second topic was something that Marie-Hélène mentioned. For years, in large international corporations, people speak about integrated reporting systems. So having accounting and financial and non-financial data to be produced in one go, and which be consistent across each other. This seems a key challenge and a key requirement. And in fact, the French Market Authority, AMF, noted that in the sustainability reports and in the appendices to the financial statements with respect to impairment tests, that there was a lack of consistency. So the fact of having one statutory auditor and having the statutory auditors and the so-called OTI, independent third-party organization, made for consistency, and this was a key criterion in our decision-making. Thank you very much. What about you, madam? What has been complex is that the ESG requirements are not new in the three companies. I know well they have been fully integrated into the industrial processes and the strategies. What was complicated is that it was a new standard. Microphone, please. Sorry.
Donc on s'est vraiment focalisé.
So we really focused.
Des questionnaires qu'on a pu.
And so I told you about the polls and surveys, but really the hearings consisted in understanding what it would contribute with respect to methodology, knowing that these standards were totally new, despite the fact that these considerations were very old ones. So the levels of the fees, of course, was to be considered as well, knowing that the answers we got were quite diversified with respect to price levels. In one case, we asked the audit committee members to really select a professional based on the understanding of the stakes, challenges, the methodology put forward, and the areas of expertise. Then the purchasing procurement department did what it had to do once the right profiles were selected. In the other case, the fees, the levels of fees were of importance. Thank you very much. What about you? Well, for me, in the first situation where the group of statutory auditors were appointed as sustainability auditors, well, in fact, what we've done was we compared methodology, we compared the fees, we compared the approaches, and all these were quite similar across the two. Then we asked the question whether we should have individual auditors or a group of auditors, and the fact of appointing a group of auditors seemed to be favored for several reasons. The first was to make the auditing results and outcomes more reliable. Now, it is just the beginning of a process with a new regulation. You know, remember the FRS standards. You know, it takes a learning curve for the auditors and for the businesses. So it was considered that the fact of having two firms made discussions richer and made for better interpretation and better trade-offs, better decisions. And the second reason for having a group of auditors was that the teams would be more available. There was assurance of that. At the time, we could see that sustainability auditing work would have to be done at the same time, and having two firms would be providing a good sharing of the load. So these criteria were the same for selecting a group of auditors in the second case, knowing that there were other reasons. The first was that expertise areas between the two firms provided a good complementary fit, with one firm being very weathered on processes, on data auditing, and the other one was very conversant with CSR and sustainability performance, with very sharp advanced expertise and skills on environmental aspects. And it was the desire to have this firm from the sustainability department. So the idea was that we would have a set of fresh eyes with a statutory auditor, one of the firms knowing the company well, knowing its accounting and financial systems, plus the sustainability expert. And the criterion of the fees was put forward as well, with extra cost of having a group of sustainability auditors, which was well controlled. The extra price was well confined, well contained. We also strive to see that the distribution of the sustainability auditors was well balanced. Thank you very much. So you're touching on several diversified criteria, but I guess you encountered a number of issues. You mentioned the price, you mentioned the fees, with the need to calibrate these fees with this new process. But were you confronted with a number of difficulties? What were the key obstacles? Well, I won't really mention the obstacles or difficulties apart from what Elmont mentioned. We didn't know. It was unknown, you know. We didn't know how many mandates. We didn't know what the fees would be, what the price would be. But conversely, when we prepared for this panel session, we touched on something which was whether we were able to easily get into contact with sustainability auditors or no. I will reverse the question, because basically there were 4 candidates and it was as easy or as difficult as when we conducted the call for tenders for selecting the statutory auditors. So it's more, so the question was more to know that there were these two different profiles, having these OTIs and having statutory auditors. But when you are a large-size company with extended geographies, and when you work in digital technology, it's quite difficult to obtain a level of independence. And the second point I want to make is that, as you can see, we came up with two different solutions, very different solutions. And what's important to note is that we need to make sure that these solutions are appropriate and well adapted to the situation. We saw that it was important to consider events and or situations and or criteria which are specific to the company, and also need to consider aspects connected with the auditors, like a good degree of independence and good environmental knowledge. Anyway, it's not a one-size-fits-all solution, and it needed some pondering and some thinking. Well, as I mentioned already, there was a degree of frustration, which was that we couldn't expand the scope as we wanted initially, because the goal of having call of tenders is to cover large ground of possible experts. There are very few so-called OTI independent third-party organizations, very few which have the right skills to serve international cooperation. I find what Marianne went through very interesting, the fact of having a group of auditors with one OTI, so-called non-auditor professional, and a true statutory auditor, because this is what we want. We want to make sure that information is reviewed based on the two legs, financial leg and the non-financial leg, and all this has to be consistent and coordinated. So quite an interesting example. And you mentioned the fees and the price. Well, it is associated with any kind of service to be rendered. You try and get the best value for money, and this is the same for sustainability. So quickly on the process of choice, a call for tenders makes it possible to get the best value for money available in the market. The key difficulty I've encountered is we wanted to see what they could contribute. And we, as a company, made a mistake. We considered that we're all in the same boat. For us, it was the first time. Let us help each other. But what we were recruiting was not a consultant. It was an auditor. And very quickly, we didn't get the answers we expected. We didn't know what the standard was. We didn't know what the answers was. So we found ourselves in some kind of a contradictory situation. So there were some degrees of disappointment, mainly due to the fact that we made the choice, and we are mainly to be blamed for this process we engaged in. Let me make a comment on this process, which was implemented by the audit committees. I would like to encourage all audit committee members to read an article which will be published a few days from now by the H2A authority, which was a monitoring of the 3-yearly contracts on assessing the work by audit committees, basically covering the work conducted by audit committees in connection with statutory auditing work, with information on how you select a statutory auditor and how you select a green auditor, a sustainability auditor. So I told you that time is pressing, and I'm digressing here, but in just one sentence, could you tell us if 1 year down the road you are happy with the choice you've made? Well, in both cases, we've made a good choice, I find, for our company. And by way of confirmation, in the audit committee meeting, I've asked the the audit committee members who chose this duet between an OTI professional and a statutory auditor. I asked them to give me a report back because it was the first time that the sustainability department was audited, and the fluidity of this duet group of two professionals was mentioned, their vast expertise area as well. And in the audit committee, among the audit committee members, we had high quality discussions with high quality presentations, so it was quite positive. And in the other situation, in fact, the auditors were reappointed for a 6-year term. Well, overall, yes, we are happy. It's a bit early to do a full-fledged assessment, but I believe things are going well in the context where there was a duet of statutory auditors which were appointed. Both statutory auditors things are smooth and going well, and the other situation where you had a duet with an OTI and a statutory auditor, things are going well with the scrutiny of this sustainability expert. The fear we might have is that it would be a bit too much compliance oriented, not with not enough substance, making things difficult for the H2A authority. That it was a lot of there was a lot of work which was compliance oriented, but there's a lot of sustainability related substance, and this was very much appreciated. If I may, the H2A scrutiny does not detract from the need for substance. This, when I prepared for this panel session, it reminded me of when we introduced the first IFRS standards. There was a learning curve, things had to ramp up their skills, and 1 year down the road, I'm quite optimistic that similar to the IFRS standards being introduced 20 years ago, things will get ironed out, modus vivendi will be found, and the best kind of balance will be found. Thank you very much. I would like to thank each panelist for their contributions. We are coming to the end of this panel session. I would like to ask our panelists to go back to their seats. I would ask the panelists for the second panel discussion to come onto the stage. And as they come onto the stage, I would like to briefly review a few slides on a survey we've conducted on the first sustainability audits. There are 3 parts in the audits: compliance with the processes, compliance with the IFRS standards, and compliance with the European taxonomy. The idea was to look at the contributions of the statutory auditors, knowing that only 54 audit reports were issued on the first part of the sustainability auditing role. What's been observed is that in 100% of the case, certification was provided, unqualified opinion was provided, with no qualified opinion. Now, on the first part of the auditing work on compliance, 19% of audits led to qualified opinions, mainly due to methodology and limits and uncertainty on the double materiality analysis, knowing that it was the first year the principle was being applied. Now, with respect to special focus, similar to the key audit matters, you have this aspect as part of the guidelines. In 98% of the cases, you have matters which drew special attention, and there's only one audit report which did not show this reference. On the second part of the auditing work, compliance with ESRS, in 100% of the cases, no qualified opinion was issued, and a large part was given to notes and observation. 83% of reports showed such observations connected with this first year of application, how difficult it was, because there was only partial guidelines or guidelines, and and principles were not available, or there was a difficulty by auditors to interpret the rules. But again, this was mentioned in the guidelines which were published by the H2A authority. With respect to any special focus, in 98% of the audit reports, only one report didn't show that. Unsurprisingly, these observations were associated with the greenhouse gas emission reporting on the third part of the auditing work. Similarly, no qualified opinions being provided across the 54 audit reports. In 26% of the cases, observations were put forward, and among these observations, there was a great diversity in the observations put forward, with no consistent trend arising from these observations. With a point of surprise, in a number of reports, there were no matters subject to any special focus, knowing that the European taxonomy has been considered as one of the most complex requirements of this new CSRD. So much for the general data and information I wanted to share with you, and I would like to give the floor immediately to Mr. Babst. Thank you, Eric. Thank you for this very quick review of fact and data. Now let us look into our second panel session with discussions on recent developments, knowing that I have slightly less than an hour to conduct this panel session. My name is Pierre-Alexander Babst. I'm a member of the board of H2A authority and a member of the sustainability department of Hermes. I want to remind you of the key role of H2A, authority, knowing that there are lots of headwinds, lots of recent developments, and the fact of having an independent authority, making sure that training programs get approved as quickly as possible, that appointments of auditors be conducted as quickly as possible. And remember, last year things were not a given, that guidelines be published as well. We understand things are not perfect. There's some criticism, but at least it gives us a baseline. And knowing that we've tried and worked with all stakeholders, including our European counterparts, to make sure we're all going in the same direction, being aligned, and we can be happy that in France we have this independent authority, which makes it possible for stakeholders to grope their way forward with some degree of certainty and visibility. Now we have our panelists, we have an investor, we have an NGO, we have an issuer of CO2 emissions, we have an SME. Clémence, would you like to start? Clémence Humeau, as head of sustainability for the AXA Investment Managers. So I'm in charge of sustainability, coordination, and governance at AXA Investment Managers. So I was part of the On Sustainable Finance platform until recently. So possibly I would share some of the considerations which were shared and put forward by the platform, as well as some of the recommendations we issued to the European Commission on sustainability auditing. And what I want to share today is some information on how we contributed to the CSRD and our perspective as investors, what's important for us when we assess the companies we invest into, and what we focused on in 2024 and 2025 on sustainability requirements and CSRD.
So, Sébastien, now, can you introduce yourself? My name is Sébastien Mondreux. I'm Sustainability Director at Worldline, also at the board of ESC3D. That's 400 such a body here in France, and I think in Paris we have a very important ecosystem with that regard. Vincent, statutory auditors. Yes, I'm a statutory auditor. Vincent Frambourg, I'm a partner and leader of the Practice Sustainability Grant and Fortin. So I have four mandates, four sustainability mandates this year, and I've signed some as being green, not being necessarily blue, using the right terms being used now. So we have some very quality third-party company. My name is Gérard Schoen. I'm a crocodile of the CSR, so I don't know what that really means, but that's not actually completely wrong. I have co-funded a number of companies in that field: sustainability accounting, CSR France, RSE France. RSE France, I founded it 10 years ago. Now it's a subsidiary of the PAPAV group. It's a third party auditor of the PAPAV group, and we are one of the sole two mandates which were granted mandates, which were appointed for the first wave. And Guillaume Moy, you are working for an NGO, and you're working for WWF France. So we are pushing on the strict adherence for these rules in the civil society. We're working on the extra financial reports, and we're promoting a lot on the transition plan for the companies for both the climate and biodiversity aspects. So we have chosen to follow a plan. What is the preparation? Which questions? What is the workload? What are the honorarium? Transparency, contribution of the civil society, so using double materiality matrices. So how can we manage all this without forgetting confidentiality? Now, doing these missions, so it would be interesting to hear from you experiences. And so to conclude, so we may wonder whether this is all relevant. What about CSRD versus extra financial performance indicators? So, CSRD now. It is true that the situation was a bit confused to start with. People had to train themselves. People had to plan different things. Sébastien, you were faced with this. What can we say? What we heard at the very beginning of 2023 was, as it was said, it was just not only a change, but a true revolution, really. What I saw at the level of the big companies in Europe before this legislation 2003, the big companies started to look at this, to analyze, and some of them has published a very first report in 2023, 18 months before the legislation was in place. And in 2024, big companies have started to publish different results about this. And then the auditors have provided some further expectations. And then in 2025, these reports came into force. And lots of big companies have started to do this exercise in 2023. That was true for the French big companies, but also other big European companies. Lots of companies have started to do so. So what was specific was the fact that for that accounting year, people were working without the final text, without the French transposition, without any elements when the extra financial performance report was done. A year or 2 years were actually needed afterwards. But for that matter, people had to work on versions, draft versions, and to talk with auditors. But lots of questions, there were lots of uncertainties. So the emitters now. Clémence Humeau, were you part of the early adopters in 2023? How did you manage this uncertainty in big companies? So I would like to share the viewpoint of AXA Investment. AXA was looking at the CSRD, and its investment company was only subject to it in the second wave. Having said that, we thought it would be very interesting to look into this as quick as possible. Transparency, of course, is essential. It is essential for the companies in which we are investing. We are challenging them. We, of course, have different questions for them, and we really wanted to stand and as an example and to show the example so as to be more relevant. And so really we wanted to be a bit quicker. It is true to remind that as investors we're subject to a number of obligations when it comes to reporting outside of CRTRD, especially for extra financial aspects. We are subject to different reporting obligations with regards to the climate bill or law, which was actually passed in France, and our teams were very busy to reply to this, and the headquarters of AXA decided to come up with these elements. At AXA Investment Manager, we worked on also on the operational side of things, human resources, and so on which no obligations were imposed in the past. Thus, we requested to get some data, to work with the financial teams, with the operational teams in different subsidiaries. So we made a lot of work so as to do a reporting at the headquarters level. Anyway, we had to have a very precise information. As for the important elements, the interpretation of the elements at AXA IM, the questions were limited because the group decided to be careful with regards to metrics that were shared. What we heard from our colleagues, what the organization was very much centralized at AXA. Lots of stakeholders were involved. We took part into the working group pertaining to the preparation of materiality matrices, and the central team of finance had the different meetings so as to interpret and to understand the different points. So we had too much information with regards what was actually published in the reporting. So we made. I'm echoing what was said previously. Lots of changes took place in 2024 and the beginning of 2025. Very quickly, with regard the viewpoint of an investor, because we talked a lot with different companies in which we are investing, especially in the company which already transposed the CSRD, and especially in France. We looked very carefully at the governance, first of all. It was how are the boards, the audit committee are taking grasp of this matter, are questioning themselves about the use of the statutory auditors that already knew the company so as to create a link between the finance people and the sustainability elements. And for us as investors, sometimes we wondered whether we had the degree of independence that was necessary. So we talked with different companies. We have chosen different decisions with interesting example in some cases of appointments for one sole year because everything was arriving late and people thought we would have a first viewpoint of the first experience that would provide us with the means for other call for tenders afterwards. Beyond this governance aspect, which are essential for us, I think what has to be kept in mind is that from an investment viewpoint, CSRD, and that is not new, is there to allow us to make sure that the company understands by working with all the stakeholders internally, but also externally, so understands the impact of the elements pertaining to the environment, social and governance aspects. I'm repeating governance again. I think it is essential. What are the risks? What are the opportunities for the activity of the company, and how, on the long term, can all this allow to generate added value? So we don't work in silos with sustainability on one hand side and the other element on which we exchange with emitters echoes with what was mentioned previously. Climate is really mastered now. We exchange about the social criteria, the biodiversity, and we saw that the emitters were sometimes hesitating to provide some figures. So, what are auditors at the end of 2023, 2024? Do you think it was a mission impossible? So what about the feedback? Well, it's just like in Mission Impossible. At the end, you always make it at the end of the day. So when I'm thinking about the call for tender in December 2023, we didn't know where we would be heading. But in February, we had lots of call for tenders, 10 call for tenders per week. It was a tsunami of call for tenders to manage. The timing was difficult to manage. In some cases, I received the specifications, but I didn't receive the name of the company. I thought it was a mistake. It was just an appendix. But it was difficult to provide some figures, to provide some quotes for that level of audit. The key, or the best reference, is to try to think about the workload. At the end of the day, it's just man-hours, and the idea was actually to provide, of course, a true assessment of this number of hours. When I say different benchmarks, financial, extra-financial indicators, but also other elements had to be quoted for. But now we're looking really at the number of hours worked, which is not always easy to come up with. And a year afterwards, we can now know how much time was needed, what can the emitter can improve, what can the auditors can improve. So an important exchange must take place. And for instance, the president of the National Committee said we wanted 150 data points and no more, and we didn't know what to respond. And the discussions took place, and people said, I've heard about the price. It's 1,000 euros per data point. And so it was a difficult time and funny time. Sometimes we made it, and that's what we have to remember. Okay, of course, you're traders as statutory auditors. Gerard, do you have a comment about this? How did we prepare? I would like to, as we all said, it was more than a change. It was a very strong change, actually almost a revolution in terms of regulatory framework, and therefore we try to anticipate things within the working group named ESG, which I am chairing. We worked with lots of people from the Treasury, we worked with Eric Dufro from the DAFRAC. He presented his work and the difficulties he has encountered. And within the working group of the H2A, because I'm representing Filions, which is our union within the H2A. And there's also a commission that exists, the CSRD commission that exists, that works on all these matters. We try to understand what was really requested, what was wanted. That led us to make a proposal, and we were convinced at the time that in order to respond to the CSRD stakes and challenges, we had to mobilize three expertise: one pertaining to sustainability, one pertaining to law, one pertaining to finance. And the links between these three expertise, in my opinion, makes the quality and the added value of the sustainability auditor. So it is a strong conviction which led to an alliance between RSE France, DS Avocat, which is a big law consultancy, and the H2A associate, which is a statutory auditors consultancy. So we work all together. So we're faced with the same difficulties, but unfortunately our scope was so important. I didn't have a tsunami of requests, unfortunately, but the very first specification I received was not very detailed, let's put it this way. So we had lots of questions. So what was the scope, diligence, volume, and so on? And other questions as well. What does that mean? What does the moderated insurance means in that case? And we were very much surprised about the differences, gaps in prices between ourselves and our counterparts. And to start with, we were actually much cheaper, and I didn't understand because we are really, really much cheaper. So we shall invoice you the advertisement page. No, it was not actually in our favor. The reaction of the company was to say, well, if you are cheaper, well, that means something you have not understood, and you may not be that good. So we tried to understand, and what was pretty disturbing was that if we were to take into account a number of assumptions, we would actually reach a level of prices that would be really different. That's the second point I wanted to mention, because that was a real curb, a real difficulty, not referring to the number of data points or the value of the data points, because we had that discussions also in-house within our companies. Vincent, how did you come up with this price, with the value of the points? Because some of these young auditors were not expert in that field. Well, in different groups, either you can work with CSR auditors and teach them financial auditing, or you can work with financial auditors and you can teach them CSR fields. So that leads to different situations, but the key was to work with experimented CSR experts, because CSR experts at the end of the day were the most likely to help us to build the set of evidence we needed that led us also to the setting up of working groups. And we, of course, we made sure that amongst the different consultancy we had a homogeneous response, so that in Paris an almost harmonized nature of the audits was set. What about the different nature of the solutions? So what was difficult for us, actually, well, I signed my first report on February the 3rd, 2024. So it was all new. So huge work within our company was made so as to harmonize different elements, so as to understand and to interpret the different situations and to provide some feedback to our clients and to provide an homogeneous response to our clients. And we made a big communication effort on this. Because every week, as said previously, we had similar cases, and I think that the second year will be much easier in terms of opinion, because, of course, we will have learned lots of things. During the first year, we did as well as we could, and now that all this has become common language, and we are pretty hopeful that things will be easier in the future. What about the cost? The cost setting, was it more difficult for you? No, I mean the spreading and allocation of the task were pretty easy amongst us. We had 10 steps, so to speak, to start with, but we divided this into 10 steps, and at each step or phase we provide some provisional conclusions, and we validate the approach of the company, so the double materiality matrix, which is really at the core of the approach. It is obvious that if our conclusions pertaining to the robustness of the double materiality analysis were bad, that would challenge all the rest of it. So it is important for the company that our sustainability has provided some outcome on the basis of what we gave you. And you can say that it should not lead to any contradictions. We are trying to do things step by step so that the company can work in a very serene manner. Guillaume, what about the honorariums and the reasonable honorarium? I think there are two elements here. First of all, the standard elements. When you make a call for tender, you can actually compare the different expenses and challenge these. And the advantage of the French ecosystem is you can call your colleague very quickly. You can tell you, okay, the trend in the market is this or that. So it's easy to know what people would charge. I think the figure to start with will time 10 with regard an extra financial performance report. From 10 that do decrease to 7. Then we looked at different industrial specificities, and then we came down to 4. And one must distinction between those companies which have an important carbon footprint. But I think that time 10 was a very first approximation, but at the end of the day it was time 3 or 4. So that provided some complementary information with regard to call for tenders, and we may wonder why some were charging more than time 3 or time 4. But really, nobody knew, because it was the very first time we were doing this, and all this discussion we had was, well, we all did something we had never done before. And of course, I can explain all the feelings experienced by the auditors. And now everybody knows what a sustainability report is. The overall test, all these hours spent by the auditors, well, you need to, of course, to interview people, and if people in a given company are not there to respond to editors, that will not work. So it was a stress test as well. Gerard, you mentioned the double materiality matrix approach. Beyond its huge technical complexity is to bring together and to involve all the stakeholders. And Guillaume, can you provide us with your viewpoint pertaining to the upstream things, identification, what is significant for the company? What is your feeling about all this for the first analysis? The double materiality analysis, companies were requested to analyze challenge with all the external stakeholders. What we saw was that for the time being, there's only roughly 30% of stakeholders that were external stakeholders, 30% of consulting stakeholders. I am a nature expert, and therefore companies which are subsidiaries in 15 countries, which experiences impacts on different ecosystems. We may actually identify a number of local stakeholders that may require expertise that even sometimes big NGOs do not have. Some of my colleagues worldwide were actually stakeholders. We were actually consulted. But unfortunately, it is difficult to talk about an added value chain in Brazil, for instance, beef. And lots of our colleagues worked on such matters. So, of course, there lacks still lots of information. The rest of the stakeholders were in-house stakeholders, investors and or clients, and we think that can be improved, and that will show a necessity to work at a very mature level. This subject will be taken into account globally. Yes, progresses were made, I think. Florence, how are you dealing with this? We'll request information on the upstream phase, first of all, where in the company where the double materiality analysis was made, to echo what was said, we were not requested as often as we would have thought we would be. That was good. And the approach were pretty heterogeneous. Anyhow, it was quite rare, and we saw two types of approaches. One being a questionnaire, which was pretty simple, sent to us by email, so we had to respond to an online survey that was leading to quantitative data, and we wondered the use that could be made of this information. And it was important to highlight, we saw some examples, some good practices, especially from Belgium Emitter, which has organized a full day during which they have brought together different stakeholders, investors, suppliers, clients. I think there were also representatives of civil society, and the day started with a presentation of the sustainability strategy of the company, which was included, of course, in the more comprehensive strategy of the company, and then the different working group were set on the different themes, first bringing different expertise according to the competencies and skills. And where this was actually reported in the final report was, of course, another matter, but beyond this, this whole process in itself, I think is also already revealing of the good practices of the company or not on its will to work with an ecosystem, thus transforming itself. I think it was very interesting, and we try to promote this to other emitters. That was the upstream phase.
And then on the downstream side of things, what we've observed in a number of reports which were published since the early part of 2025 have reflected this heterogeneous approach in the way issuers have prepared their initial reports. Some of these issuers wanted to be a bit more cautious in their double materiality analysis, with a selection of only a few themes which they considered materials to date, preferring to have a higher degree of maturity in order to engage in a more mature dialogue with the auditors. So basically, they were a bit afraid of the discussions with auditors. So a number of these issuers were a bit conservative due to this, which means for us that it did not make for comparison across industries and across issuers. Something else that we've observed above and beyond the diversity of the considerations is the substance in the reports themselves and the narratives which are used. There were a number of cases where the way they exchange with the legal departments, suggesting to go into very granular details in some narratives. And for us as investors, knowing that it is important that we have granularity on the policies and so forth. I'm not saying that quantitative data is enough, but very often we had a lot of narrative, making it difficult for us to get to substance. So I think that it will be one of the things which will be scrutinized going forward. Now, on the conservative character of the issuers at the C3D, what is your angle on things, and more generally, what should be done to comply with the regulations and requirements without pushing it too far? With respect to consultation of the stakeholders, well, the sustainability directors have been engaging with this consultation process, with the double materiality matrix being part of the CSR2. But I've been conducting double materiality analysis, and right from the beginning, I've consulted with the stakeholders. And the two key conclusions we reach when you engage in this process is that, number one, the materiality matrix analysis conducted by the company is basically industry specific. That is, if you are in the automotive industry, you will basically map out the issues, and you will have the same map as your competitors with the same issues coming out. So this is the first conclusion. The second conclusion is that among your stakeholders, very few will give you a specific analysis of your risks and of your profiles to come up with the right picture. So the consultation process will only give value when you are much exposed to different geographies, where you have to consult with communities, with people, where you will have feedback from the field of nuisance or of issues, and this is valuable. Now, what I'm telling you is valid for some companies, but for the others, deep granular work with the risk departments, but this requires a lot of energy, lots of effort. And what the CSRD requires is that companies explain why their business models are sustainable models and why they will resist climate shocks and the planet boundaries. So you have very few companies which are able to do that. And the review is one of a risk analysis process, scenario by scenario, trying to make projections and trying to identify impacts, how impacts can be minimized, and what is the financial impact at the end of the day. So this is why the processes have been more documented, more robust, richer, benefiting a lot of value, which is what investors should get. Basically, the companies have delivered their sustainability reports. 126 sustainability reports have been delivered across Europe. And what we now expect is that investors engage with these matrices and come up with their analysis industry by industry. And these matrices are not always matrices, because 1/3 of issuers only have engaged in the preparation of these matrices. Now, how do you manage the technical expertise of some stakeholders like NGOs on biodiversity aspects, and knowing that business models are very diverse and not everyone is capable of interpreting how relevant they are? Now, on the transparency of these first initial reports, well, of course, we are an NGO, and we considered it was very useful to have this degree of granularity and information. So lots of companies were able to use the structure of the directive. Auditors have helped them. They were able to answer the material questions, considering that we consider these questions are material. And this gave us a view on policies, on action plans. And as a first round of reporting, this gave us quite structured and well-informed, well-documented data. Now, the issue for us as NGOs is that we would like to have action plans on the biodiversity plan and on the climate plan and on the climate front as well. But we also want to have investments backing it. Otherwise, it is not credible. So when there is an action plan, when there are targets, we want companies to put euros against that. Now, I will give you an example of a report which will be published on industry, knowing that we're not targeting any industry. But today, the European banking industry shows no systemic French bank considering biodiversity as a material criterion, compared with other banking players in Europe, like ING and HSBC, considered that biodiversity is a material requirement. So now scientists do not take the angle of cautiousness, but what we've been considering as NGO is that industry issues will gain more and more traction, and this is how we can help, by doing industry-specific reports, by pinpointing the existence of tools, articles, and reports. So are we being too cautious? Are you being too cautious? Well, it depends on the momentum here. What's important is the momentum. What I said is that in the second half, there should be the moment when investors will embrace these reports, will dig deep into them, and will ask for more information, will ask for more data. This is what we hope for. And this should generate this second set of momentum, which is what you mentioned. When we look at matrices, when we look at directions in one industry, this should give us a set of consistent data and trends. So this is what the role that the investors will play. I don't understand your competitors rate biodiversity very high. You don't seem to be doing it. What is your response to that? So investors will challenge companies because their baseline reference will be an industry-wide matrix. So this will come. But what sustainability directors are doing is that they are looking at the matrices produced by their competitors and to see whether they are aligned with these matrices. So today, by default, I take the carbon footprint. You know, I'm in the IT industry, so I have Capgemini, Sopra, and SAP, and I'm looking at the consistency of my emissions data, and I'm having questions. Why does doesn't this competitor show emissions in the building industry, in the building sector, in the IT sector, in this or that sector, and I'm challenging people. And then comes the phase of comparison. If there are no CO2 emissions on the 3.8 or on the 3.11, am I the only one? And if I'm the only one, then I'll have to report numbers in this. So this is the phase we're entering. So where the sustainability director won't want to be misaligned with their competitors. So wave 2 will be this period on the transition plan, which is a very binding instrument. Today, a finance director makes a 3-year projection and explains to you that the revenue will land in between X and Y. As a sustainability director, this is not what we are asking you. We are not asking you to produce a 3-year projection on the climate front. You are being asked to produce a 5-year projection. And on scope 1 or 2, it's not +2 or +3. It's -15, -30, -40%. So the level of risk is gigantic. It's gigantic over time. For scope 1 and 2, this can be discussed. But for scope 3, with your suppliers, you have the commuting travel for your employees, and you have the impact of what you sell. And so for some, when it's a question of reducing the footprint on your products. In combustion engine vehicles, if you need to reduce the emissions over 5 years, the investments are very different. So right from year 1, it was identified that it couldn't be done because it required month and month of effort and work. So some companies publish that because there are companies which are more mature than others. Transitional plans have been quantified and then they are to be financed. So what we're expecting, what the directors are working on is their transitioning plans. So in 2025, what we'll have is the transitioning plans. The big question is whether it will be covering scope 1 and 2 and just that, or whether it will also be covering scope 3. But you need to understand that scope 3 involves making projections over 5 years. It's very difficult. When you're in the IT, what should you score the CO2 increase for AI? Is it 5 million? Is it 50 million? Is it 100 million with respect to the CO2 impact of AI? Everybody says that AI will be generating lots of CO2. Well, okay, right, but how much? And is it just to book a plane or a train ticket, or is it connected with the data center or the plant that you are operating? All this has to be looked at against the degree of maturity, and this is where exceptions can be introduced so that businesses have time to get compliant, and this is where industry practices will guide the way forward. Now, so much for the beginning of the role. Now, with respect to the business as usual role of auditors, I will ask our auditors to report back. Is it good news? Is it bad news for you as auditors? How did you proceed? We spoke about financialization of businesses with the finance department at the helm and the sustainability jointly coming at the helm as well. How did you proceed? Well, all in all, things were interesting, quote unquote, because we saw two universes converge. Now, not necessarily in the companies which you have here on the panel today, but the finance director asking what the sustainability director is doing now that CSRD is becoming important. So we had these two worlds, these two universes meeting more or less nicely, more or less actively. So we were at the interface of these two universes with the finance director saying, well, this is my business, this is financial statements, this is accounting, this is up to me, let me do it. And once the finance director got into the granular levels, he or she stepped back and said, well, these sustainability issues are somewhat complex. I will call on my sustainability experts, on the sustainability director. And the sustainability Committee Director basically considered that as part of the DPEF process, the reporting on non-financial performance report, that we've done the job, and now we are seeing these green auditors, these sustainability auditors coming up with new questions. Now, the feedback in year one was the discovery and meeting of these two worlds, and this emerged at the audit committee level, making sure that the audit committee members had the right level of information. So there was much communication. You all experienced the fact that the sustainability department came more frequently at audit committee meetings, sometimes with a time slot of 5 minutes or 10 minutes, but how to explain double materiality matrices within just 10 minutes explaining that to directors who had no clue what it was. So there was lots of pedagogy, lots of education, lots of communication, and at the end of the day, again, this was a successful process because everybody published their reports in due time, which was what they were required to do, because everybody did their bit on the side of the finance department. They did what they had to do. On the side of the sustainability department, they did what they had to do to make sure that the lead time were complied with. Lots of companies would issue their DPF report in late March and early April, and then they were asked to report the CSRD report with just 2 weeks being added. And I'm not sure that they doubled the teams, the size of the team. So, and the sustainability auditors was in the middle of all this, making sure that the two universes converged and worked together. Now, from the inside, Sébastien, at the intersection of the sustainability and finance departments, well, it was the first time that the sustainability team was at the helm of a project which basically had as team members bigger departments than them, because there was a finance department, there was a risk control department, so bigger departments than the small sustainability department, right? And hoping that they would understand these complex sustainability issues. So basically the sustainability director was setting the dates for the meeting, and so we ran the process, and everybody understood what they had to understand. Now there were frustrations obviously being generated, where questions were asked which didn't get always the full answers, with long periods of time, when people were not happy, when the processes were not considered as being smooth and fluid. So I basically responded, that was the first time. No one had ever done it, so you can't expect a smooth and fluid processes where everything would be documented. No, it was the first time that people travel this way. But as you said, the reports were published, the reports were granular, with lots of detail, with good, appropriate structure. No, not a lot of missing information, with the companies, the French companies, among others, being well positioned in this respect. And basically it was a baseline, it was a starting point. I've attended meetings at the AFEC meetings when they said, well, we are hoping for the finish line to be crossed with this DPF reporting. Well, it was not the finish line. It is really the new starting line with new requirements to protect these newly defined business models. So this was the message to hit home, omnibus or no omnibus. These requirements are there in existence, and we need to enter all the information to protect the business model of the companies in light of the new risks which have been identified. Now, my feeling is a very positive one on the way things happened. Basically, my counterparts were basically as a duet. You had the governance, risk and compliance director who was at the helm, and the other director who was at the helm was the sustainability director. So these two were at the helm. And then you had the HR director, you had the finance director, and you had the legal director. But the two sustainability, risk governance and compliance were at the helm. And with a good complementary fit, with lots of discussions with the audit committee members, with the board of directors, and even in calls for tenders for appointing the auditors, we pitched. And this was a totally different story from the DPEF process. We had to pitch in front of the chairperson of the supervisory board or the board of directors, with the chair of the audit committee, with the chair of the CSR committee, with the finance department, with the HR, with the legal director, with the executive committee members. So I really found that the CSRD promoted a cross-cutting set of dynamics, and the board of directors really engaged in the process and really challenged their teams to understand what was achieved. They tried to understand the conclusions of the sustainability auditors, but really with the past practice of the DPEF, there was no involvement and support by the supervisory boards or the boards of directors. So we spoke about these complementary fits, about these duets internally. We said how complex and complicated these new documents were, these new regulations were. Can you tell us about the uncertainty that you had to travel? Clémence, you wanted to make a point on this to show how practical and pragmatic companies had to be, but it was not a given the general situation. Now, I would like to share some of the observations and some of the discussions we had in the Sustainable Finance Platform at the European Commission. So the role of the platform was to look into the taxonomy and how it intersected with the sustainable and finance universe of European businesses. In this context, we met with lots of people, SMEs, issuers, financial services companies, supervisors, a number of European bodies, NGOs, of course, and the CSRD directive was not part of the scope of the work by the platform because the EFRAG was the one which monitored the developments, but we discussed with issuers, especially in the preparation phase, because the platform was active in between 2023 and 2025. Now, the question of interpreting things, the question of what assurance would be given on this data, we mentioned a lot the European taxonomy, which is a different animal from the CSRD, because the CSRD is a bit imprecise, but the taxonomy wanted to be very precise. In practice, it wasn't so precise, but some of the feedback we got, indeed, that that was difficult to interpret, and it was true for both the CSRD and the taxonomy. It was difficult to interpret when you are a company, when you had to prepare the reporting. All the teams were involved, indeed. The sustainability teams, the legal teams were involved. But above and beyond this, you had the operations teams as well, which were involved. And legal and finance, and with the discussions we had with the auditors, the feedback they gave us, knowing that this was a European level development work with representatives from the different countries, and there is a specific characteristic in France, is that possibly we moved a bit faster than many other member states in Europe on questions of sustainability reporting. Maybe one of the feedbacks we got was that maybe there was insufficient coordination in France and elsewhere. Everybody recognizes that this was a learning curve, but that guidance was missing. Guidance varied from one country to the next, from one industry to the next, and this created complexity in the preparation phase for these reports. And possibly, and in France, you've done a lot to prepare for that and to support that, but the European Commission wanted to move fast. They published a final guidelines which were transposed very late, didn't want to postpone its implementation schedules. As was said earlier, we had other regulations which came into effect in the past which were complicated with several years of difficulty when companies had to embrace the text when things got stabilized over time. So, but these are the same scale and magnitude of regulations in a more complicated political situation. So possibly the European Commission was a bit ambitious as to the capacity of the ecosystem, because again, it's the entire ecosystem and the entire value chain which have to coordinate efforts and work together for things to go well without necessarily the right level of support and accompaniment. So the capacity building somehow falling short. And I find it interesting to compare with another large standard, the FSB, where they published ahead of time. Now they are considering changes and adjustments, but they involve the stakeholders, FASB. But the stakeholders have to be onboarded so that the timeline and schedule is appropriate. We have another 1 or 2 years to converge parties, and with the omnibus package, it won't be next year, but it will be 2 years which will be given for everyone. So let's push on with a very fine report. If you were paid by the word, it would have made your fortune, right, as auditors. Now, on the production of these reports, what were the lessons to be drawn? And with your auditees, with your clients, how did you proceed? How did you go? How did it go? What can you say about this with hindsight? Well, thank you to mention what we did to produce reports by our firm. It was hard work. The format surprised our clients somehow, because it was a report different from financial auditing work with 3 parts: key points or no key points, qualified or unqualified opinions, observations or not, lots of educational work, lots of information, lots of iteration as well. Very much like with financial auditing. There are adjustments to be made, observations to be made, corrective action with a dialogue which had to be conducted. And I agree with what you said about the two worlds. When the sustainability director meets with the finance director and says, here is the report, things are going well, and the finance director jumping out of their seat, so many recommendations, so many observations, so many qualified opinions. How can it be? It's not possible. So you had education to do, and with respect to what was said on the DMA for the structured parts of the information, if there are issues on the DMA, it should be addressed now and not wait until March, with qualified opinions to be issued in March. So to make sure that the approach would be structured phase by phase. There were lots of discussions on the climate front, saying what should be done on the climate, what should be documented, what transitional plans should be introduced. There were fewer discussions on the employee side of things, on the labor side of things, except for some industry. But the climate was part and parcel of everything. Making it everyone's business. And this came out of our discussions earlier. The climate impact, so statistics were very telling on the number of observations which were produced, which should be reduced in year 2, but there's an issue with scoping, then an issue with the lead time, when information is being provided, when you audit this information, and when information is only available 2 or 3 years down the road until it is produced. There's this issue with the lead time. There are the observations, and the lead time are connected, is connected with this information. And it was funny to see that when information is provided on an indicator which is used for determining the package of a senior executive, then all of a sudden you get full attention from the leadership team. Gérard, what can you say about the production of this report? Well, yes, I may give you the feeling from the inside of companies, because overall, the boards of directors were very happy with these sustainability reports year one, and rightly so. Now, there were issues, there were tensions, there were some degree of conflicts between the various departments, between sustainability and compliance, but I found that they got good compromise, good trade-offs, that it was not just ticking the boxes. They tried and produce a report which involved the various stakeholders and which was a good report for the various stakeholders. It was not perfect, of course. At some point, we are afraid, because during the provisional conclusions, I came up with a list of the observations which had lots of issues in them, very diverse observations, telling everyone that this could be a potential observation. And at the end of the day, it was like a cold shower. But the various departments and leaders and executives responded very well. And ultimately, they considered that some of these observations were legitimate and justified. As an example, I told them that I considered that their auditing and control setups were not mature enough to the level which could be hoped for. But basically, 90% of the companies said the same on sustainability reporting, that is. And in fact, they took up these recommendations and took this up as observations stating their limits, their avenues for improvement, and giving very thick reports. And basically, we concurred with that. So here again, the experience was very positive.
Same understanding by the stakeholders with regards the reaction pertaining to the complement of information or appendix that can be found in reports. Well, to us, the viewpoint of auditors is important, since it allows us to validate the methodology or the structure of regulations such as CSRD. Hence, when it comes to in-house processes or governance issues, it is a positive signal. But the matter is that now we need to work on the credibility of these stakes, and we shall publish our assessments of the transition plan, the CSRD plan. And of course, we need to work with different experts in different sectors. The credibility of the different commitments is more limited, shall we say. One of the examples is the climate transition plan. In all of the European companies which have published a climate transition plan, I think only 10 are aligned to 1.5. I think the CDP has published a report last year on this issue, and will continue to do so. So that's all good. So of course, credibility does matter, and we're trying to promote this. Of course, we see which structures are already in place, and thank you very much for this. So all this, Clémence. From the investor viewpoint, the audit is an essential part, so as to provide trust in the quality of the data that we report on. That's why I talked about the exchanges we had, dialogues we had with the emitters, the setting up of the audit committees, the boards, and so on. That is all essential. I shall provide a nuance, actually, in the very first years that has led to the fact that emitters were fed by the complexity and were very careful about all this. Now, with the omnibus package, we should continue to think about good practices and has external stakeholders, consumers and readers of this financial information, actually, on the different type of diligences you can perform with regard to the history. We talked about the transition plan, but also the forecast. We are operating in an ecosystem and we're all faced with a number of uncertainties since we are dependent of regulations. Having said that, as investors, being able to start to assess, to understand how a company, a project is operating, what the business plan is, allows us, is essential for us, sorry. Well, to come back to scope 3, we know there's some limits to that. It's one of the compulsory assessment to be done, and our viewpoint is not reporting anymore on scope 3 would mean that one would isolate in one's bubble, and if translation must take place, well, if companies must take into account the effects pertaining to the lack of biodiversity, loss of biodiversity, social aspects, and so on, in terms of risk and opportunities, where companies must work in terms of risk assessment and value chain as well. So working on scope 3, working with all the right disclaimers so it is accepted by the auditors, seems relevant to us. In order to finish with the businesses' viewpoints, on the report itself, would you say it was pretty easy negotiation or not? We had a weekly meeting with our auditor, and therefore different points were shared, and there's no reason to discover big issues at the end of the report. And it's an added value, of course. This project is complex. Let's talk to each other, every week. And when one enters by dynamism, that's a good practice. Okay. Having that constant dialogue and constant feedback is important. I remember the discussions we had at the very beginning of the projects. The auditors were auditing, the companies were preparing the elements, and that was it. It was a good practice done by lots of emitters. I want to thank them all because you explained that very well. We didn't know what we would talk about the following week, but there was always something to discuss. This allowed to discuss all this week after week, to talk with different business units as well, to make sure that the project experiences continuous improvements and not to experience bad surprises at the end of the day, allowing to make some weekly assessments, of course. So it's a good practice, of course, to share, talk to each other on a very regular basis, and the earlier the better, so as to avoid bad surprises. So the report, of course, may be the end of the job, but as good project manager, we always provide some feedback, and that's the key time now, the key moment. So finally, at the end of the day, all this CSRD versus extra financial report, what can we say? Guillaume, maybe first of all. Do you think that's better? What we saw Well, with regard to extra financial performance report, there are an additional 15 to 30 additional pages. Of course, it is better. The technical standards and the details are more important. There again, we do not see this report as being the strategic management tool. They should be within the next 5 years, considering the world we are living in. I think it is an improvement, since for many companies, the materiality of the impact has been discussed and assessed. This topic, well, the production processes have impacts in different ways, and also on our ecosystem. And it's, of course, I work at WWF France, of course. So let's make sure that this double materiality issue is immense important. I've heard about ESSB, and we've worked also with other actors such as TNFD, talking about the flexible materiality pertaining to nature and so on. We can see that flexible materiality is a way to do financial materiality, and these issues are not financially visible. And the issue is, when they will be, it may be too late for some value chain that will be completely destroyed by the physical risk and so on. So, of course, it is better. And we shall see in panel 3 that lots of discussions are taking place. So we are promoting companies, we're prompting them to work on these issues so that they actually respond to these issues, so as to support their business model, which in the next few years will change. Positive vision for you, Sébastien? Well, let's speak about the 3 positive impacts of CSRD. We saw the first being that in all these reports, something that you will see is from this year for the very first time, the ambitions are more systematic in their nature. Until now, the CSR manager would say how they would reduce the environmental impact, but they will not tell you in 5 years' time my gender equality will be reduced or by such percentage or whatever. And they didn't have 5 years targets. But when you actually have 5 years targets, you have a twofold constraints. When you have an objective, you cannot change it anymore. And since you cannot change it because it's publicly available, well, a company will change de facto. And we're not talking here about reporting. When you actually transform things, you have to carry out some projects. So, of course, people must be engaged in this. So you can find all this in the report, first of all. Second point that will transform things is a transition plan. Big companies previously, as a CSR director, I'm the one who would demonstrate that the company is doing its job when it comes to citizens, with clients, is making sure that the Paris Agreement is being respected at the corporate level. Now, if you provide me a transition plan, and you show me that all the boxes of COP 1, 2, and 3 are ticked, and you tell me which figures will be reached. Of course, before that, you were telling me that the Paris Agreement would be respected. Now, you provide me with evidence that it would be respected, okay? Now, point 3, since you're doing it, tell me how much it will cost you. And tell me what is the margin. And that's, of course, carrying out action is easy. But reducing environmental footprint when being an industrial actor, of course, that costs €1 million. Of course, that decreased the margin. And of course, the value of the company is decreased. If the company is changing, is committed, when the transition plan will take place, you will see which companies will be able to respect their commitments by 2050. Some companies said it would be carbon neutral by 2030 or 2040. And of course, the issue of financing is interesting. If I have to reduce the overheads, the expenses, I must change completely my production process. How can I finance all this? And that is the third point. The third point, connecting to investors. Investors will, the company in which I invest will cover this risk. Have they prepared their business model for this, especially when it comes to extra financial aspects? As for the auditors now, it's providing you lots of wealth of honorarium. So you can have a very good living. The first point is the return experience, the feedback provided by clients when exchanging with auditors. Companies would say it's a long and complex project that was repeated several times. What are the lessons drawn? What is the vision? What can be improved on both sides? That's the kicker for 2025. And when one sees how the quantitative data can be made more reliable, we should provide more internal control. Second subject has to do with the qualitative, how with the retro planning, how to gain time and to spread out the expense for 2025. One of the good practice would be to say we could have a narrative version before Christmas. Lots of narrative things can be done before Christmas for spreading the expense, providing an advance in the phase so as to conclude the quantitative part of things in a more quiet way. After 31st of December, lots of comparisons have been done in the different sectors. Okay, different things exist in France, but I want to see these different things. How can I compare to these people? Am I better or worse? So, of course, the sector aspect will be essential for next year. Gérard. First of all, paying per word is essential. The first sustainability report with regard to the extra financial report was much more important. Company, actually, one of my clients told me, well, the environment is good, but 250 pages for sustainability report is not great, really. So I want to come back to a point which I think is interesting. I was previously working in finance. I'm passionate by profitability, sustainability, and value of the company. I think that there are lots of works to be done that remain to be worked. Lots of works have been done already. 200 or maybe 300 studies have been done on this issue. I've audited different actors, and all the actors can tell you that ESG can be created. It is true, I'm convinced by this. Clients such as Schneider Electric, which is rather sustainable, rather profitable. It is true. It is something that the companies in their reports have not yet promoted. And that's the aim actually, to show the resilience of the companies, of the business model. Its perennial nature, its ability to create value, not only for the shareholders, but for all the stakeholders. So I think it's a way of improvement. So I would actually agree with you on that. And we saw some reports from clients, from eaters, which were very good when it comes to the extra financial and sustainability aspects, because the format was less stringent, and they have lost the consistency of reporting pertaining to standards and some of the rationale pertaining to the financial rationale was lost. And this approach will take time. We do hope that Eurojust will allow to move in the right direction and to focus on what is important. As investors, one of the points or main advantage of a CSRD is to have comparable data. That is essential for us because it allows us in our analysis, in our due diligence of the companies, to do that in a more simple way, rather than spending too more time with the companies so as to understand how they computed the data. We are supposed to have methodologies which are the same ones. I would say that is the ambition. It also allows us to prepare our reporting and to integrate some metrics in a more simple way. So our CFDR reporting, we hope, will be prepared in a more robust way in the future for good enough and important enough scope that is essential for us as investors to do that. The very last point, which I think is important, is a transformation rationale. What was said about that reporting is not the end of is, but rather the start, is essential. I think that was done previously by some companies, which were some of the best, but the involvement of the management of the different operational teams, of the financial teams, the risk and compliance teams, has transformed companies in a sustainable manner. Sometimes it is difficult to understand. In fine, we have transformed the way people think, and that's probably the way, the objective of CSRD. So we can actually thank you very much for this very rather positive conclusion. Thank you very much. I'd like to thank our different speakers. I want also to thank Sofisimo Taketev, somewhere here, who has prepared this roundtable, and without her, nothing would have been possible. Thank you very much. I see that our IMC now is back, so shall I leave the floor directly to Olivier or not? Yes or no? Thank you very much. Thank you. I shall now ask our next speakers to join me on stage.
Bonjour à tous.
So, good afternoon, everyone. So, I shall introduce myself. I'm Olivier de la Cherie, and I'm a member of the College of the H2A, and I am the founder of a company based in Nantes. So we shall talk about the future during this third roundtable with those we know, and we shall tell you what they think about this. A reminder about the ambition of CSRD, which was actually to prompt companies to integrate CSRD stakes and changes within their strategies, but also to provide reports to improve the transparency and to widen the scope of the companies which are considered submit to this obligation. So do we still have to increase the number of companies concerned by CSRD? So we shall provide you an update about the regulation and legislation And we shall hear about the different speakers. First of all, Eric Duvaux from the EFRAG, Kevin Besançon, Patricia Savin, and Sarah Bagnon, KPMG. But before that, we shall leave the floor to a company and we shall hear the testimony of the Sustainable Strategy Manager, Mrs. Elodie Le Breton.
My name is Elodie Le Breton. I head up sustainability for GS Smart Building. Tell us about the strategy. GS Smart Building is an atypical property development and building company. We are a low carbon company. We also pioneer so-called off-site building. We are totally convinced that it is the best way for the building and construction industry with lots of benefits. We build faster. We have less waste, less dust, fewer debris, and much better carbon emissions compared with conventional work sites, and much better working conditions for employees. So many benefits which are monetized in a CSR approach, and this is what CSRD has enabled us to do. Tell us about your CSR pathway. So we are an SME. We post 300 million euros in revenues. We have 800 employees. We already have to report so-called non-financial performance as part of the DPEF, and we anticipate, we jump the gun for the CSRD reporting by 2 years in order to smooth out the workload and the cost and structure it in as simple a manner as possible in the company. We are very much called upon by our shareholders, by our bankers, and also by our clients who regularly assess us, who regularly assess our maturity and CSR performance level, which means that we report across some 350 KPIs across ESG considerations and aspects. So enforcing CSRD was not such a huge difference, such a huge gap to do as reporting, but it structured our approach, starting with a double materiality analysis to identify our impacts, our risks, and our opportunities. Then we did what we call a gap analysis, i.e. we've measured the gap between our current performance level and the target performance level as part of the CSRD requirement. And number 3, we produced our sustainability reports complying with the CSRD requirements. So when the omnibus package came out, we were almost ready to publish our sustainability report based on our latest DPEF reporting requirement, which we wanted to convert as the newly defined sustainability report. We decided not to wait and to continue our voluntary reporting, and we are using the current VSME framework, which is a bit lighter than the CSRD framework, but which makes it possible for us to be very much structured to meet the ESRS requirements with well-identified data points to show the benefits of our model. What are the obstacles that you've identified? The only obstacle that we've identified was at the very end of the process when we had to find a green auditor. It was quite painstaking as an exercise, much more costly than we anticipated. The format of auditing work, which I accepted, required a lot of time to spend with respect to auditing, and the cost was too high. It was too difficult to impactful for such a small SME like ours. But we needed to have a sustainability auditor to structure the process and to improve us. Auditing is the cornerstone of sustainability reporting. If there was anything to change, is to make it possible for SMEs to be audited. Are you going to continue with this approach? Yes, absolutely. The decision was clearly made. We cannot afford stopping work which had been going on for 2 years. There's a high uncertainty on the economic, political, and social front. And the only posture we can have is to stay the course. CSR and ESG is a key enabler for performance and for competitiveness. There's no question that we will lower our standards. The next generation company, the sustainable company, is a company which considers and scores its impacts, its risks, its to opportunity over the long term. With and or without regulatory requirements, we are going to keep pushing on CSR and ESG. CSR is a competitiveness enabler for companies. It is absolutely critical for next generation company to consider, score these impacts, risk and opportunity over the longer term, which makes it possible for the company to initiate action plans, to provide visibility and transparency to all our stakeholders, our employees and our clients. The key for sustainability is as part of our sustainable and responsible strategy under the CSRD, and CSR has become a key requirement for a responsible company.
Voilà.
Well, this is it. Now, we've just reviewed a video which is from a best-in-class top performer. So the company I've been heading up until October. There are 400 of us, and MGR Smart Building has 800 employees. We've been having a CSR approach for quite a while. As Madame Bagnon is putting it very well, we have a ESG narrative, but we didn't take a voluntary approach. Basically, you have two possible postures by businesses. You have the one you've just heard on the video, the best-in-class top performers engaging in a voluntary approach, and those in the middle of the class, very much like us, the middle performers, which have to be boosted and which have to be pushed. And this is the key point in our panel session now. Let's move to our speakers. Let's go on with the regulatory aspects. We'll be talking about the progress of the regulatory front. Hello, Kevin Balançon. You are the deputy head of sustainability for in charge of business affairs at the French Treasury department, part of the French government. Can you tell us what your role is in the current discussions on the CSRD?
Merci beaucoup et bonjour.
So thank you very much. So very quickly, the bureau in charge of the sustainable finance and governance of the companies has transposed CSRD in 2023, dealing with lots of the texts we mentioned today, CSR and accounting expertise, audit and so on. And as such, I am part of the H2A college. I am a member of this college. Within the remit of discussions at the Omnibus package, we are doing lots of consultations with different companies to get their feedback, so as to know how they have prepared the sustainability report and audits, to talk to all the relevant stakeholders that can actually provide us with recommendations and some feedback, so as to improve the current regulatory and legislation framework on this basis. We come up with proposals. This can be done also with and for other ministries. And we're also working at the cabinet level in the different ministries, and therefore we're working on different positions that France could have at the European level, which in turn can be used within the remit of the Omnibus package discussions. The different member states, of course, are discussing this as to amend these legislations, and we are sending different proposals to different working committees, to our colleagues which are based in Brussels. And on this basis, we're amending the text on a regular basis, since we are forwarding the instructions pertaining to the position of France about this. So you do know, of course, what our position is, to tell us about the decisions that have been taken and published last week. Can we start probably by mentioning the decisions that were taken at the European level in a subsidiary question? And I would like to know the positions of different of the other European countries pertaining to the decisions which are and will be taken. How did the process will take place? The Omnibus package was actually well, a decision was taken by the President of the Commission, and she was actually setting up a new college of the statutory auditors recently. Of course, some European elections took place at the Parliament level. A new college of the statutory auditors were done on the basis of a new commissioners. Sorry, was based on new parliaments, and this announcement was made by the President of the Commission. And as from November, we have provided as state proposals. We talked about the taxonomy, about CSRD, and so on the basis of the consultations I mentioned. And then the text was published. And from then on, we had the very first debate pertaining on the Stop the Clock directive. And within the omnibus package, there was some delay pertaining to the application of this, and thus delaying wave 2 and 3 of the CSRD 2 and 3 by 2 years. So we agreed on the delay of postponing by 2 years this. Decision was voted by the Parliament, was published at the official journal in April, and that is done now. This is a sole text which is really now applicable and in force. All the other texts that you may see, fortunately and unfortunately, which are not the postponement by 2 years, or not texts that have been formally adopted. So the sole ones we hear about are not been adopted. The thresholds we hear have not been adopted. No, these thresholds, and France's position was well known. We wanted CSRD that was much more professional, anything between 250 and 1,000 employees, with less important set of constraints. And in other countries, in Europe, SMEs are important. They don't want to impose this set of constraints to the SMEs. So the threshold of 1 employee and 4 million euros is listed in a mandate of negotiation. So it's a compromise, and this compromise is a mandate for negotiation for different states, so to discuss with the Parliament then, because the Parliament will examine this very text, and on the basis of this mandate for negotiation of the states and the proposal of the Parliament, we shall agree in 2026 for a final text. So all the leaks you hear of are not a final text, but only proposals.
Alors, donc,
Right. Let me take up with our example. There are 400 of us. Are we part of a wave? Will there be more waves to come? Well, I cannot really say as to when the European level discussions will end, because it will only start in early 2026, which is a long time from now. But with the current regulations, what France has done with the Stop the Clock directive, we have transposed the directive. Now, the lawyers among us will say it hasn't been effectively transposed, but it has been taken up in French law via the so-called DADU law, and we have postponed waves 2 and 3. You were part of those 2 waves, so it's been postponed by at least 2 years. Now, in 2025, companies have kept enforcing it based on the text in existence this year. So we've also reduced the criminal penalties for those companies which don't know whether they are where they are subject or not to the regulation. So we've strongly reduced the criminal penalties. We've done away with the penalties. In fact, we've just decided to make the general meetings null and void if this were the case. Basically, there are two types of countries. There are those countries who do not want to lower the threshold, and there are other countries who are okay with the threshold. Well, yes and no. Countries change in their positions. Talking about the transitional plans, depending on the issues, you have different groups and coalitions of countries. Because basically there are 27 member states, they are blocking minorities, there's a majority rule, so it's not easy as a process. Now in Europe, there's a majority of countries who are in favor of increasing the thresholds. So our proposal has been put forward. France is usually listened to when it makes proposals, so there's a majority of countries which are in favor of the threshold we are pushing, because it already got consensus. So they are not necessarily two categories of countries, but there's a majority. And France's position is what we've heard, to increase the threshold to 450 employees and to 1 million euro in revenues. This is the position which the Council of Europe has converged on, and France has decided to support the harmonization of threshold, because some countries had a threshold of 450 million euros with a different threshold of European companies at 50 million. We advocated that the threshold should be harmonized. This is our position in the context of the document which was approved or agreed upon by the Council of Europe. Now, the goal of CSRD was to expand the number of companies compared with the DPF process, but this is not the case, right? The goal of the CSRD directive was to expand the number of companies, but also was to channel investments into sustainable projects for companies which could show their sustainability commitments. Now, we'll see what the situation is in a few years from now. Anyways, the current reforms are reforms to simplify things, to cut the red tape, and their goal is not to reduce the ambitions. Basically, the KPIs and data points should be quantitative based, should be guidelines for investors. We try and reform the CSRD. We use the feedback of investors, because there was a green finance targeting and channeling of investments, which was of great importance. Now, with respect to the future goals and whether it has been an obstacle to challenging investments towards sustainable companies, the future will tell. Now, the way we design the reform of CSRD and the way France has come up with its adjustments was to focus on these goals. So the goal is to simplify. The goal is not to retrench. Yes, indeed, there were many views on the directive. There are improvements to be made. It's a new regulation, it's a new exercise, a new process. We couldn't be perfect on all sides. Things have gotten improved. We are still improving. We are still simplifying things, but the level of ambition will not be reduced. What are the next steps? What are the next dates? Will there be a review clause? When will it be? The next date for negotiating the process, what's happening now is that the Council of Europe has stopped its discussion at the government level. We are less involved. Now the Parliament, the legal department of the European Parliament will meet, will come up with a report to prepare for the discussions which will be organized in October and November of 2025 at the European Parliament. So the text will be amended then, and depending on the outcomes, we'll have the trialogue discussions between the President of the Council and the representatives of the European Parliament to harmonize the two texts, the Parliament text and the Council text, and we'll agree on a final text, which will be the final text which will be published on the legal gazette, and then on this basis it will be transposed into French law with a new law in French legislation, which will happen a few months after that. And then in 2026, the new legal instruments will be enforced in French law. This will happen in 2026. We hope there will be an agreement in the early part of 2026, which will be transposed into French law quite quickly. This is what we've done. We transposed the first directive into in a few days. There'll be more substance. It will be a bit more complicated. We hope it will happen swiftly so that 2026 everybody knows what the requirements will be. Thank you, Kevin. Not an easy exercise. Let's move on to you, Eric Duvaux. You are the representative of ANC at EFRAG in charge of sustainability standards. I'm not the representative of EFRAG, even though Pierre Alexander said so. I represent the ANC, which is a member of EFRAG. So, and EFRAG doesn't want to be represented. I would like to know what is the role played by EFRAG in the context of the CSRD directive. And I know that you want to give us a historical recap on the Green Deal. So, as a reminder, the EFRAG is the European organization in charge of preparing the standardization and drafting the ESRS, which are adopted by the European Commission by delegated act. This is the so-called level 2 compared with what Kevin has presented, which is level 1. I work on level 2 of regulations. We are currently working on simplifying the ESRS, which is part of the omnibus package. And the ENC is the French authority for accounting standards. And with respect to the ESRS and the CSRD, the first goal has been to help businesses to steer and manage their transformations and transitions when transition and transformation is due in transportation, in building and construction, in farming. So helping those businesses to manage their transition plans by counting what matters. Based on the first two panel discussions, it's the half empty or half full bottle. I'm not sure that the initial ESRS was successful in counting what matters. And then the information which is used for managing the transitional processes are required by the large clients. This was very well illustrated in the video we watched. So it is an enabler for competitiveness to have sustainability reports. This was the first goal. The second goal, as Kevin mentioned, has been to target and channel private investments into the financing of these transitions. So hundreds of billions of investments we are talking about in Europe. And in order to do that, you needed to have better standardized information which could be transmitted to investors, to the financiers, and to the bankers out there. In any case, whether it be on the side of clients or on the side of sustainable finance, these demands will stay, including for businesses which, based on the end thresholds set by the omnibus package, the question is whether the voluntary standards which will be put forward and required by businesses of fewer 1,000 employees and less than 450 million euros in revenues, will you still have will you still have a multiplicity of questionnaires, or will you have one single set of question items? Very interesting, because you published on the 20th of June last an adjustment of the ESRS standards, which were simplified and reduced by some 50%. But it is not VSME. Can you tell us about simplifying these ESRS standards? And in other questions, you'll tell us more about the VSME. Now, let us start with the large corporations in excess of 1,000 employees. now to explain to you what the process of simplification is about. Now, in France, we, as the French Accounting Standards Authority, we expanded the scope of responsibility for our authority to cover sustainability. And when the CSRD directive was transposed into French law, we have responsibility for coordinating all French positions across all French stakeholders to bring these positions to Brussels and to the EFRAG. So in April, we built upon the assessment of needs by investors and analysts, and we worked jointly with the AFG to identify which information sustainable finance stakeholders needed. One of the key issues with the Green Deal with respect to its transparency pillar, i.e. the regulations that Kevin mentioned, pillar 3 in banking, SFDR, taxonomy, CS3D, all these finance-related regulations were designed possibly in too broad a manner. The SFDR included 70 PAIs, some of which not being relevant. We went back to the beginning and we asked the French stakeholders what information they really needed, and they listed these requests, these demands and these needs. Which listed 150 data points. Then we worked with the other stakeholders and came up with a proposal around 200 data points, which mainly are quantitative based and which were the subject of a consensus from all stakeholders, be they auditors, investors, civil society organizations, businesses, of course. And we drew up in just 2 months new ESRS standards, which we submitted to EFRAG. This was done in between April and May of 2025. The hope being that we would influence the drafting and simplification effort for simplifying the ESRS standards. Today, EFRAG is currently digesting this set of inputs and proposals made by France and that the other countries and stakeholders contributed to. So it's a gigantic set of inputs, and EFRAG got more than 800 proposals to simplify things. There were more than 800 stakeholders contributing simplification suggestions to EFRAG. There were more than 400 one-on-one interviews and discussions. So it's a gigantic consolidation work done by EFRAG. And next Monday, 7th of July, there will be a meeting to prepare the EFRAG board, which will be held on the 9th of July, next Wednesday, and EFRAG will publicize the working documents of this simplification effort, which will be version 2 of the simplified ESRS. We suggested 200 data points. There will be in between 250 and 300 data points. So it's still a work in process document, which will be the subject of a survey report, which will be the subject of a public consultation, which will be organized between the 1st of August and mid-September. So there'll be 1.5 months for stakeholders to respond to this proposed set of simplified ESRS. And with respect to the number of pages, the current ESRS standards were 356 pages thick. We drafted a proposal of less than 100 pages. We significantly reduced the volumes of these standards, not so much with respect to substance. What we did is that we did away with a qualitative verbatim statements, but 80 people are contributing inputs, knowing that they are representing 27 countries and 5 or 7 different stakeholders. So it's a very complicated process with very complicated negotiations. And this is being duplicated at the level of EFRAG. It's always trade-offs with the half full and half empty bottle. I'm an optimistic, so I hope that V2 will be accessible and published last week. I hope it will be well received. There will be August and September to do corrections, and there will be a proposal submitted to the European Commission by EFRAG on the 30th of October, with a few weeks of a lag, and there's the interim report to the Commission where the data points will be reduced by some 50%, but it probably will be 60%. Now, final word on the timeline. The European Commission will receive EFRAG's proposal in late October. Then it will have up to the 30th of June 2026 to publish its own delegated acts after engaging in its whole consultation process. So we'll have a rectified delegated act to be published on the 30th of June 2026. Thank you very much for this information. I thought about those companies with fewer than 1,000 employees, and this weekend I looked into the VSME standard. I read it, and my question is as follows. Will this VSME standard not be the solution for those companies fewer than 1,000 employees engaged in a voluntary approach, having a reporting tool which will prepare them when they will be subject to CSRD, when they will be above 1,000 employees, because there aren't so many communications on this. And it's a small criticism, in fact. VSME is in English language, 65 pages only in English languages. So for the French SMEs, so large corporations are finding it difficult already, but SMEs will even find it even more difficult. So let me remind you that the VSME standard is not part of the CSRD directive. It was developed by EFRAG as an instrument which is totally outside of all existing regulations. It was a spontaneous initiative by EFRAG to come up with a standard which was designed for companies with fewer than 250 employees, which is the definition for a European SME, fewer than 250 employees. This is why and how the VSME standard was born. And today the discussion is that the non-subject SMEs are being extended. In the CSRD, there was a genetic disease which was the lack of proportionality, because it is silly to impose a standard for reporting to a company with fewer than 250 people, which is treated as a CAC 40 listed company. So we increase the threshold, which means that 80 or 85% of European companies have been removed from the scope of the CSRD. So there will be questionnaires which will be sent out. So the reporting workload will be the same, except that the VSME standard, and let me come back to how we could advance the VSME standard, except if a very simplified standard become the voluntary standard, which will be systematically enforced and applied when all those requesting information, i.e. the large companies, purchasing departments, bankers and investors and rating agencies, if all these stakeholders embrace and appropriate these standards as a smallest common denominator, maybe this standard will be a de facto standard applicable to the entire market. Well, market forces will decide on that. What I understand is that it won't be made mandatory by rule of law, at least before the end of the term of the European Parliament. The last question is, as the VSME, which has 18 reporting requirements, and as it was designed for companies fewer than 250 employees with two modules, one basic module and one more advanced module, shouldn't a third more advanced modules targeting companies with more impactful industries, which would offer them a voluntary approach whereby these companies would report on Module 1, on Module 2, and in some cases on Module 3. So this decision has not yet been made, by the European Commission. There are a number of companies who would like to keep the VSME standards as is, including the French ANC authority for the French accounting standards. So we advocate a module 3, which would be a bit more comprehensive. The idea being that what we call the cap in the value chain, quote unquote, i.e. the theoretical value, the theoretical limit of what the bankers and the investors would ask would remain part of the current VSME. I didn't ask you the question, and I'm sure you want to answer this question. What is your view of the current reform and the discussions being engaged at Brussels currently? Well, I've been working on sustainability issues for the last 30 years, sustainability reporting, NRE, Article 225, DPEF, and all of this. And all practitioners who've spoken today know this. The industry-specific dimension is key for purposes of relevance. So if only one decision to do away with sectoral standardization is a disaster, because sectoral standards could have been designed, not as EFRAG is doing it, because it would be cumbersome, but could have been designed as a response to the double materiality analysis by simply listing the material issues impactful for every industry. You greatly simplify the double materiality process. At EFRAG, we are fighting against and with the 80th representative of EFRAG to simplify the DMA, and we can't get there. And I'm afraid that next week what will be published will not make it possible to simplify the DMA process. But we all know that if we had a list of material issues or so-called material issues per industry, we would meet many requests. So I cannot be satisfied with the omnibus package, if only for this reason. Now, with respect to the threshold, I have no problem with increasing the threshold now, if only to lower it in 5 years from now, if necessary. But we would have more progressivity. The real issue is the sectoral dimension. It is disastrous. It is a waste of effort. We are wasting all the developments which have happened in Europe with all the software programs which were developed and marketed. Lots of investments and efforts by auditors. It is to be deplored.
Thank you.
Thank you, Eric. Mrs. Bagnon, the floor is yours. So, you're working at KPMG in charge of ESG. You're the chairwoman of the Sustainable Commission of ECC. I've talked about the ESG narrative of companies previously, and found this in a magazine I read, and that's actually your wording, and I think it's very good actually to use the term narrative. You may want to introduce yourself, maybe, of course, because I think you have a wide range of activities, and then we shall talk about your reaction to what was said previously. So I shall introduce myself. So indeed, I'm associate at KPMG with twofold responsibility. I'm in charge of ESG, but also I have been involved since 2022 in the transformation of the auditor's function in linked with the CSRD, and with more than 100 professionals I want to greet, and we are supporting all our counterparts to take ownership of this new technical matters, to disseminate the information, to help our counterparts to conduct their sustainability audits, since we're talking about 4,500 counterparts who have worked with this sustainability visa, and more than 2,700 who have already been certified. So the issue, the question, sorry, you may want to have is, what do you think of this directive, of this simplification? both as an employee of KPMG and with the hat of a CNCC. Well, with regard to this simplification proposal, I'm vigilant and constructive also, because this very first exercise of reporting was very complex and ambitious. And I want to say it was normal. We talked about the IFRS, these accounting standards. 34 years were needed to generalize the accounting standards, and now we have been working with them for 25 years. The climate emergency does not allow us to work on the long term. We've got only 5 to 10 years before us, but that complexity has led that this matter was difficult to take grasp, to understand by different auditors and companies. And today, this topic is coming back, is being discussed again, the omnibus package and proposal. The stop the clock have been translated in the ADU law, the simplification processes, of course, go in the right direction, but you know, they will lies in the details. Of course, we may discover that next weekend. But also, I am vigilant because the proposal of the council and the having two thresholds, 1,000 employees, 4 million of turnovers, are we actually simplifying, or are we renouncing to the initial ambition? I think that is a question not to neglect. These companies of anything between 500 to 5,000 employees are the core of the European businesses. These actors are important in the value chain for big companies. Excluding them would mean that they shall not have the means to think about their resilience, since there exist also tools to think about that our economy, and also you know that the European Central Bank has reminded us that climate change is an important issue of financial stability, and therefore it is important not to neglect these actors in the dispositive, and CNCC, as Philippe knows, has always defended progressive application of the CSRD. In the proposal, the Council there exists a clause which allows to rethink, to review the process, given the different information that are available. That is a critical lever not to abandon the initial ambition. The issue of accounting standards that are applicable is also important. Eric mentioned VSME, increased VSME. It could be a potential pathway. Now, if we were to simplify too much the ERS, the simplified ERS can be another pathway. Anyhow, whatever the pathway that will be chosen, one tool that must be forgotten is the double materiality analysis. If we want to have a quality reporting that is relevant and truly useful for users, we need to use the materiality analysis. Last point, because we are auditors, and a number of critics have been made with regard to auditors. I think it was said during the previous roundtable, our works are critical. They provide trust to the data, and a unified approach of the audit at the European scale is important to guarantee trust of all actors. I've read a survey by the IFA that explained, I think they sent a survey to roughly 60 companies, which it said that a rather positive thing was governance commitment today in the companies. Apparently, this issue of CSRD makes that the governance of the companies have taken grasp of it and are working on this. Do you think that's something you have felt? For those who have taken part in Wave 1, I hope so. But for those who took part in Wave 2 or 3, it may be different. So do you think that governance is taking this seriously? Yes, that's part of the feedback we have had. The governance of the companies, the boards, the boards have really taken this into consideration, are involved. As the expectations are high, they've also told us that they need to have the relevant tools so as to apprehend this new matter, this new field. Some of them told us that they would have needed more time for sustainability reporting. What do you think the future of CSRD is? The future of CSRD, I think one has to come back to the initial ambition. And it was said previously in the previous roundtable, we're not there to tick boxes and to do reporting for the sake of it. CSRD, the objective of CSRD is to support transition, to allow companies to further their resilience. So we must come back to this initial objective and the idea. And when it comes to double materiality analysis, is to make sure that as a company, to know one's competitive advantages on the basis of sustainability, on the basis of all these analyses. How can I make sustainability a factor to stand out from the crowd in my market? And so to respond to your questions, how do I apprehend the future of reporting in terms of sustainability? I think that this link with strategy must be strengthened. And there are some important recommendations made by the IFRAG report. But that idea to have an executive summary that would allow to have an overview is a good thing. But within the CNCC, we have made a survey of the sustainability surveys within the account companies today. There are reports comprising 140 pages on average. The link with the strategy is essential. You must again understandability so as to apprehend that narrative, the sustainability narrative mentioned previously. That is the first point. Second point, smart simplification of the standards. And ambitions are high. Simplification is important, but the quality of the standards also is important. If the threshold of 1,000 employees is chosen, then more voluntary reporting will be done, and the voluntary reporting will allow to create a bridge to provide data to the big companies. This voluntary reporting, I think Elodie Le Breton has illustrated this very clearly. It will allow the companies to make some priorities to structure the CSR. It's not CSG for the sake of it. The idea supported by the French National Body for Accounting Standards is a good one. If there is no solid basis to do that voluntary reporting, the danger is that everyone would use their own basis and to have a fragmented market without basis for comparison. So I think it's important to strengthen the SME standard, which was initially devised only for SMEs. It was not devised for bigger companies initially. Do you think that CNCC could have a role in pushing up companies which are not compensated to have a voluntary approach? The CNCC is listening to its clients, so maybe can share some feedback we had from different companies were questions, and roughly 30 companies which have published in 2024 extra financial reporting, and they were requested whether they would like to do some sustainability report in the future. What they said is in 9 cases out of 10 they shall continue to do so, and for half of them actually already decided to request this statutory auditors to do so. Most of them have also told us that they shall enrich their extra financial reporting and prepare themselves to the CSRD reporting. So we are not VRP for our professions, but what we have seen is that our clients themselves do not need us so as to see for themselves the very virtue of this exercise, especially for those who have had the opportunity to work on the sustainability reporting. If I may, it is a bit different in other European countries. It's a message of hope as well. Thank you very much. Can I say something about sustainability insurance? The insurance of this voluntary reporting, of course, that is essential. I think Eric is very clinched to that. And potentially we are moving into a world where there shall be a wide range of voluntary reporting. Some will use a few indicators, but some will use a wide range of indicators, such as the CSRD type. Some companies may request some comforts on this type of voluntary reporting. So it's important to keep in mind for the users of this report, but also for us as auditors, to remember that providing insurance on a standardized report is not the same thing as providing insurance on a non-standardized report based on criteria on the basis of preparation, which is different, because a number of questions that can be a reason. First of all, the audience of the report. One may question whether the information within this report is consistent, relevant, because the temptation may be high to communicate on what is great and to silence what is not so well. And a number of criteria, quality criteria, to consider before accepting the missions. Among these criteria, the relevance, comprehensiveness, and so on, and the understandability and so on. And for us as auditors, it is better to, well, it is more demanding, to provide insurance about a non-standardized report. And similarly for the users. Users must be aware of the fact that these two things cannot be comparable, of course. Thank you very much for this reminder, Mrs. Savin. Thank you very much for taking part to this roundtable. The lawyer associated at DS Avocat, your sustainability auditor, your chairwoman of sustainability at DS and a member of the Sustainable Development Commission at the National Council of the French Lawyers. So what is your opinion about the omnibus package? Thank you very much for inviting me. So why are we here? Why CSRD? It's not about, well, regulation for the sake of it, but at the global level, there are three main challenges: climate change, the erosion of biodiversity, and of course, we're reaching the fifth extinction of species. We know about climate change and all the collateral damage and the 2050 carbon neutrality. All these challenges that must be met at the global level, then law and regulations can be support so as to modify business as usual, to say, no, you can do business as usual, you have to think things differently in a sustainable manner. And today, I am disappointed. I was upset. And maybe I'll be hopeful in the future. I'm disappointed. I was upset, actually, that France was actually had made some progress in advance, and I've been working at the CSR level for 20 years before. France was leading the way, and I was working with a listed company, and they discovered extra financial reporting. I said, no, it's terrible. Another additional paperwork. And of course, we delegated a lawyer to help them when they had their extra financial reporting. And they said, well, it's very interesting, actually, because they have 3 or 4 production sites and realized that there was some turnover, the water, electricity consumption, and is different. So this first level of regulation was very pride for France. And we had another set of regulation, and we supported lots of companies. And now the companies are expecting this time where they actually can do some forecasting activities and look at this sustainable nature. If I want to be there in the future, what shall I do? It's not only about turnover, but about also different things. CSRD was good. The text itself is interesting. It's very smart in this Green Deal remit.
Magnificent Green Deal, which is consistent now. What was CSRD about? As was rightly said, it was more and more relatives with comparability, but let's be careful. They're always part of sustainability dimension. The CSRD process was about making projections, making sure that the business and company was sustainable for itself and for the planet. So the CSRD as a process was not just a process to target investments and channel investments, but not only that. This is why there were thresholds of less than 250 employees. There were a number of missed boats. As Eric said, 250 employees was much too low. And the second missed boat is that the delegated acts for the ESRS standards, for those who read it, too complicated, much too complicated, much too time-consuming. Yeah. We all agree on that, right? So the simplification process is a useful one, but it came too radically, too brutally, much too brutally, you know. No one expected it. It caught everyone unaware. You know, at some point, there was a rumor on the grapevine that the CSRD would be revised, but it wasn't possible, everybody thought. That was the democratic result of many years' effort. But all of a sudden, it was changed, it was replaced, and all the contributions were swept away. So I do consider, possibly in an exaggerated manner, that somewhere this is going back and this is retrenching. This is regression, but the stop the clock is here now. We have to do with it. But let's just be careful with the thresholds. Those will be which are subject to the DPEF reporting wouldn't be doing anything anymore now. is what you're saying the position of the Bar Association, or is it your own personal position? Yes, it is my own personal. It is my own personal my own personal position. But Isabelle Grenier, who represents the Bar Association, with Marion de Fignac, they've done great work, and the French Bar Association have been looking in depth into sustainability and what it meant. In 2024 and 2025, there were reports issued, and there was a report by the French Bar Association representing 70,000 lawyers, which says that the sustainability guidelines instruct the lawyers and legal experts as to the sustainable dimensions, what role have to be played by legal experts, and the second set of guidelines issued in 2025, where lawyers can be instruments. It wasn't a given initially, because so we had to be COFRAC compatible, COFRAC compliant. But recently, the French Bar Association adopted a position paper, and in this position paper, there is something which is deplored is the lack of consultation, the lack of consultation in the adoption of the omnibus packages. There is a request to maintain the high standards and ambitions of the European Union, and there's a request to provide legal certainty and to remain, to keep the qualitative dimensions, that if it is only purely quantitative, there will be Excel spreadsheets being filled out and intersecting spreadsheets with no sustainability substance anymore. My personal position converges with the French Bar Association's view and postures. Where do you stand as a lawyer on sustainability? Several things here. You have lawyers, but also you have the certifiers. Upstream, the lawyers can provide advice and consulting service. We can explain, we can decipher. I've worked with several clients, provided advice, who were faced with the CSRD directive plus the delegated acts, telling me and asking me how many data points. Do I need 1,178 data points? Understanding what the delegated acts. So this is about advice, about interpretation, about explaining, because we have been we don't speak about MACF and deforestation. So the role of lawyers is to zoom out and as much as possible to give consistency to all these European and national regulations. So this is the conventional role of a lawyer. Then you have obviously the role of litigation, because you have litigation around the duty of care, about compliance, and it has been a role forever. And in the duty of care, due diligence work in M&A transactions, we do the due diligence work and we see whether the company addresses its ESG stakes and challenges. When I supported a client with 86 real estate sites which were built on the previous brownfield sites, you have huge due diligence work which we did. And then there's the other hat, whether a merchant, a business lawyer can do certification work. The answer is yes, similar to engineering and design firms, similar to accounting firms, provided that we are compliant with COFRAG 029. So as OTI, we are part of the alliance, and I'm convinced that sustainability involves diversity, multiple skills, multiple stakeholders. I won't engage in taxonomy. I won't have any added value. In 3 months' time, I can't become a taxonomy expert. But I've been engaged in environmental aspects and issues in environmental issues. On other subjects, Gérard will have more added value on accounting matters. Our friend Arto, as a statutory auditor, will be a better help. So very often clients have 3 or 4 experts. So yes, there's a future to all this. And there's a future for the OTIs, for these independent third-party organizations, with a number of questions, because they are training programs which have been certified and approved by the H2A authority to benefit from the grandfather clause. I've been a trainer. In my class, I had lawyers. 1/3 of the audience were lawyers saying that they wanted to do ESG. They went through the 90 hours of training, and at the end of the 90-hour training program, I've asked them whether they all were to become OTIs. They said no, because they said they can't get certified on 17029 standard. It takes too much time, takes too high a price, because the market has been reduced by 80%. Those who have been OTI, we've been OTI since 2016, will do the extension. But for those who are not OTI today, it's an extension which wasn't there with IFRD. It's being maintained in CSRD, which is a big problem, with a demand carried by Filiance, and to postpone the grandfathering clause, so that all of us can benefit from grandfathering existence to be registered by H2A, and so that the ATI, which are not COFRAG certified, can take time to be compliant with a 17029 standard, which is not so easy to do. Kevin, can you answer us on this issue of COFRAG certification that some OTI have? I can answer you on the grandfathering clause, which won't be a final answer, but let's say that there are indeed discussions on the way to find the right legislative vehicle to further extend the grandfathering clause, having you follow the 90-hour training program when you already registered and becoming a sustainability auditor above the 1st of January 2026, and to extend it by 2 years, making sure that the grandfathering clause is extended by an additional 2 years. It's not yet been transposed in the current regulations, but we're working on it effectively, truly, and we'll try and see with the Parliament how this can be adopted. But there is hard work being done, and I really fully agree with that. We need to solve this issue very quickly. Thank you very much. We still have a little time. I'm looking at my watch. What I suggest is that we go around the panel and that you tell us about bright prospects for the CSRD. I can see bright prospect for the CSRD, i.e. there's a maximum of voluntary businesses engaging in the CSRD. One after one, dear panelists, tell us, as you review the obstacles to be removed so that things go well, smooth and fluid, and what is your take on the next generation CSRD having bright prospects? Starting with you, Mr. Duvaux. Well, it's good that you start with me, because I'm not sure I'll be as optimistic as you want me to be. I can but observe that there is a real gap and a real shortfall between the first 2 panels, where after the difficult winter, with sunny days and with time, people saw more positive aspect with CSRD, which is encouraging. Yet we are confronted with the omnibus package or packages, which are about simplifying the efforts and even retrenching on some of the dimensions. And we need to have in mind, and this was discussed in a previous panel, why there was a pushback and why do we get the omnibus package today? Well, businesses have realized that the financial means and resources which were supposed to be allocated to the transitioning and to the positive future upside of the transitional impacts. All this was being affected, and the enterprise value is being affected, which had an impact on competitiveness, because now that the European companies are not well valuated, and if they get a discount due to the CSRD, this becomes an even bigger issue. So this is one of the issues. How do you address these issues, i.e. the financial means and resources allocated to the transitioning with the potential negative financial impact? And to be more positive, the CSRD directive and the Green Deal, generally speaking, have already been successful big time in putting the IFRS foundation into motion and China into motion. The USA had started to get into motion, but with the Trump administration, there was a stall black. Now, China, except if things have changed, but until December of 2024, China embarked on a program between 2024 and 2030 to align on environmental and social requirements which were inspired by CSRD and FASB. We don't want to see the retrenching of the Green Deal and the SRD halting all these global initiatives, with Europe being a good performer, with France being the best performer inside Europe, but we wanted to impose the same requirements to the other European countries, and we knew that the European platform could take Brazil, China, India, Japan, and Australia in its wake. This is a winning battle. This is a battle underway. We wouldn't want the omnibus package to slow down the desires of the other countries, because it's a global issue. It's not just a European issue. We have lots of environmental and social regulations in Europe. Let's take this as a half positive message. Madame Savin, positive message on CSRD. Yeah, so a bit more positive as possible. On China, let me go back to China. I went to China in October. I was invited by Chinese businesses to explain to them what were the European regulations on ESG. They had identified that there were European regulations which were very relevant and very positive. In December, after that, they adopted their so-called Chinese sustainability reporting standards. So the Chinese are in marching order now. My hope is that Europe comes back to its Green Deal trajectory, that it finds its backbone again. It is my hope, you know. I'm being very blunt here in what I say. Patricia, if I may, China adopted the double materiality analysis for quite a while, yes, and it's been made a standard since December of 2024, absolutely. Now, a point of hope is that there's a group of 198 businesses which signed a press release called the Global Initiative. The sustainability rules are critical for European competitiveness. This was signed on the 1st of July. Quite counterintuitively compared with my introductory remarks. My hope is that the ECB or ET Finance or BBI France or finance stakeholders keep promoting the fact that ESG goals and standards are good for the planet, are good for finance, and I believe that the ESG goals and standards will be saved by the financial industry. Thank you for this message, because I've been participating in many panel discussions, and I realized that the financial services stakeholders are the ones pushing strong, and even so the most demanding stakeholders in the ESRS are the financial investors. Thank you very much for this. Kevin, yes? Let's have a positive message from the French Treasury. Well, just to say that the omnibus packages are the result of a crisis of confidence in the avenues of development which were mentioned in this on this panel. In order to simplify the CSRD directive, there are not many of us on this panel, but we disagree. One said that industry standards were important, the threshold were not important. Others said that the threshold which was important. This is what governing is about. Governing is a complex act, and decisions need to be made. But the more you are around the table, the more proposals you are which are put forward. And if you pile up standards and requests, you end up with the standards which are difficult to adopt and to implement. Now, decisions have to be made, trade-offs have to be made by someone, i.e. us, which are viewed as bad by the experts. Why don't we have the sectoral standards nor the thresholds today? Well, this is because, as you said, it wasn't designed for medium-sized companies. So in order to protect from a poor standards, you just remove the standard. When you do a poor choice, the solution is to remove the choice. Why don't we have a sectoral standard? It's because it was considered as too complex. Now, many sectors said we would have loved having a standard, but seeing what came first, we'd rather take the risk of not having a sectoral standard. But people don't realize that the government took a top-down approach. We really need to take the full picture. If we made a brutal decision, but which are not brutal decisions, they are simplification to move forward. The solution is to base our process on trust and confidence. What we try and do is to have a simple, understandable, easy to implement CSRD program to justify the initial goal, i.e. to have a CSRD to manage transitioning for businesses, to target and channel sustainable finance and funding, and to attract companies to voluntarily postpone their non-sustainable operations. Once this has been done, you can consider doing step 2 to extend, but you can't do the reverse. You can't design a full, comprehensive, complex package, hoping for the best, hoping for it to be adopted. This is what we did first, and it didn't work. We had to take tough decisions. They were decisions to take, but we believe they were necessary decisions to take. The hope is that it restores trust and confidence, that everybody understands that it gives results, that impact studies can be organized, that we can demonstrate that it has had an impact on sustainable finance, on climate change, and then in a second step, these initiatives can be extended. But this will be step 2. Step 1 is about restoring confidence and trust. When we consult on our proposals, on the text in process, you have businesses who tell us, I understand what you are doing, I understand the standards, I understand the rules, and knowing that they are harmonized with other European regulations, now it's applicable. Now I have trust and confidence in the future. Possibly I won't shout loud when I hear a politician or a regulator speak about additional requirements. My hope is that the omnibus package restores trust and confidence, and then in a second step that you envisage improving it. This is my message of hope.
Okay, Mrs. Bagnon. I think the future is being built at the present time, and we must listen to the Wave 1 companies pertaining to what they experience. We All Europe has made an interesting survey in partnership with HEC, the French business school. So more than 1,000 companies have been surveyed, and 90% of the surveyed companies tell us that CSRD has furthered engagement and commitment of staff within the companies. So it was said actually at the previous roundtable. It's an interesting signal. Of course, it was complex, but simplification is on its way. So let's consider these feedbacks, return of experience, and the future, of course, will be built on that basis. Brussels will not realize our dreams. We must be the actors, the drivers of our future in one of us in our roles as auditors, other functions or positions. So we must come back to the very rational spirit of the text, i.e. promoting and favoring resilience. It is a tool so as to shed a light on strategies to further governance and the steering of companies. So each of us actually must do some awareness-raising actions and play collective, of course. It is complex that we're learning as we go. And of course, one must accept to err, of course, and to make mistakes. Thank you very much. Will be the final word. Thank you very much for all this.
On est pile dans le timing. Je ne sais pas si on a le droit à des questions ou pas.
So we have time for questions or not? I think everybody is very hot, very warm, and we'll gain time and move to our next speaker. Thank you very much once again for all you said with this rather optimistic viewpoint. Final word will be actually provided to us by Mrs. Frison-Roche. So you may stand or you may sit as you want, really. Prior to leaving you the floor, I think, yes, some drinks will be available after this event. And I would like to thank all the H2A staff. We are very sorry about the weather, the very hot weather. It's very hot, unfortunately. Well, it's purely because you have worked a lot, I guess. The floor is yours. Thank you very much. Thank you very much for inviting me. And I did just like you did, i.e., I benefited a lot from all what has been said, and that has changed me, actually, because quite often I am invited to speak because I'm a professor of law. I'm a professor of law, of compliance, which was actually not so well regarded. Talk about vigilance as well, and very often people tell me about CSRD. If it's at dinner time, I do not enjoy any dessert, which is not given to me. If it's at a conference, people are staring at me as if I were the one who wrote CSRD, and people tell me, it's you. It's you who actually provide companies with so many difficulties. So you are the lawyer. It's not a compliment. I'm not an auditor. It's my fault. Right. So day after day, yesterday, I attended a colloquium pertaining to the business efficiency of law, economic efficiency of law, and CSRD. I'm sorry. Well, it was not really well regarded or considered. It's a catastrophic decision. It's not worth it. But everybody here agrees on the fact that CSRD is good. I was already pretty well convinced. I came here at 2 p.m. It's almost 17:47. I'm continuing to think that it's still good. And on top of this, I duly noted, because I took some notes, that we are really at the very start of this. I still think because there were lots, a wealth of practical information out there, because I was very well explained how things are taking place for real. And I think things are doing well, actually, in the real world. I hope that it is recorded. I hope that it is recorded. I'm saying it seriously, because there's one character that was not mentioned who you may know in 5 years' time as the judge. The judge will look. The sustainability report is published in 2025. And he will look it up with a very severe eye, because in all good faith, he will consider it with retrospective glasses. And we will not know that we will know information kept by the regulating bodies didn't know, the European Commission didn't know, the Treasurer didn't know. Nobody knew. No, he will not know about this, I can assure you. And where the judge will be requested to consider legal actions, legal proceedings against the auditor. He will do similarly. And then he will be told, we didn't know at the time, we were talking about this with different services, it was not easy, the standards, we didn't know very well, and so on. No, you won't know about this either. And that retrospective viewpoint, I hope we'll be able to have this recorded as an evidence, because a case was mentioned by one interesting speaker who took the example of the sustainable report of biodiversity for the beef in Brazil. Excellent example. That example is the subject of a legal proceeding for a lack of vigilance for the due diligence with request of commitments and sanctions of a big French agribusiness. So I wondered, how will the judge reconsider this? Vigilance Sustainability Report. What is the link? The link is that the mapping of the risk, which is the basis for the diligence, and the matrix we need is the same. It is the same one. Why? Because what you talked about previously, this global approach, this interconnectivity between the different tools, which make that these are the same materials that are being used between the CSRD and the CS3D. That's the same thing. But CS3D, i.e. the European due diligence, uses this very same tool that you've already started to use. And these are already legal actions. 2017 law, is already applicable. And the rationale is already the same. And the judicial judge has never heard about CSRD, because he's just like me. He's an expert in law, an expert in civil or corporate law. So He knows about criminal law, business laws, but audits, not necessarily. And therefore, what was so well repeated and repeated over and over again, training, explaining, pedagogy, because the main challenge is the reliability, credibility, the evidence. And when I read, I would say, just like you, because you have certified, maybe you have done them, but I'm reading the reports. I'm reading the sustainability reports and the vigilance plan, and sometimes I can see that they are the same ones. And I'm saying to myself, these are the same ones. And the same ones. But these are not the same text, not the same regime, not the same stakeholders, not the same thing, not the same judges. And then I'm saying to myself, I'm going to take some of their time to not just give them some homework, because they have a lot of work already, but draw your attention on some reflexes to pay attention to what is written in the sustainability report, especially when it comes to a term, commitment. In these sustainability reports, and probably rightly so, it is said, I am committing myself to. It was also said, one must commit, truly, with a proper agenda and with figures. But in law, people are looking at the terms being used, and people wonder what is the scope, the importance, consequences of words. And when looking at the terms, one looks at the texts, the law. And within CSRD, since it is compulsory, it is said that the company is compelled to say what they have done, what they are doing, what they will do in the future. It is an obligation to inform the prospective approach. The company must say, I am thinking of doing this, I might do, I would like to, I have the ambition to do this, and so on. So why has CSRD, so it was very well said in the first, second and third panel. And I came here as the child who was just born. Since I have not taken part to the preparation of the first, second or third panel. I just came to listen. And what was said each time was that the sustainability report is an instrument, a tool. So that tool was imposed by the European Union. The tool is meaningful only and can be interpreted by the stakeholders, by the judge, the regulator, with regard to an objective. So what is this all for? And it was said, the European Union has invented the sustainability report in the Green Pact because the European Union, and we can be proud of it, wants to reach the carbon neutrality. And if it compels companies and public companies especially to provide this information, it is to prompt investors to provide monies so that this European ambition can be satisfied. It is stated in the appendixes, and same thing for the vigilance law. So hence, CSRD is an obligation to state, to say things. It's already quite a lot, but that's only that. If a company, because it's doing well, or because it wants to do so, or because its own ambition says that ambition, my action plan, my strategy, not only because I have compelled to do it, well, makes me to be within the European strategy, but I also have my own strategy, so it will be this with that monies and this agenda. So in law, that means that it is a commitment. I just want to tell you this, because I think in each professor there's also a student. So I've read the sustainability report and I've tried to understand something about it. In all the articles, I never came across yet that the commitments were committing people. I've always read that commitments were pretty good, were leading to trust, and it was about ethics and so on, good management, good practices. Yes, but in law, once again, commitment commits people, commits companies. So when being in a company, make sure, please be careful, because if a sustainability report says, well, within a given agenda with such means, we shall do this, it could be a commitment, especially if the very same terms are being used for the vigilance plan. So why is that? Because in the vigilance obligation, that's CS3D, and CS3D, as you may know, has been inspired by the French law of due diligence. So the obligation of vigilance is not an obligation to say anymore, it's an obligation to do, to act. Hence, it is essential to distinguish the obligations to say, to declare, that's a sustainability report, to the obligation of doing something, which is vigilance 1. And that is not that easy to make the distinctions between the obligation to say, sustainability report, and the obligation to do, obligation of vigilance. That is not easy, nor in the texts, nor in the actual practice, since there are so many commitments. And when in 2 years' time, 3 or 4 years' time, before a judge, in a less friendly mood, certainly, more tensed mood, before the judge at the tribunal, the sustainability report will be considered as an evidence, as under the remit of the vigilance effort that must be made. And people may say, look, what's what that company said, and they committed themselves. They said they would do so because the vigilance is the obligation for big company and the thresholds or with Omnibus Directive or becoming the same one, so it is the obligation to detect and to prevent any things that may be detrimental to human rights and the environment. So, as an auditor, please keep in mind that distinction, which is essential between the obligation to say what you're certifying and the obligations to act upon, which has nothing to do with you and the companies in this learning curve that is being experienced by the companies. Will have the companies already have this in mind?
De charge dans votre...
Well, this is another task you have to carry out in your educational role. I think it suffices, doesn't it, as homework? Thank you very much.
Merci beaucoup.
Thank you very much, Marianne Frison-Roche. I would like to thank all of the panelists for the quality of your insights and contributions. And I've seen that the audience was always very silent and very attentive. Thank you for attending this second round of discussions organized by the French Higher Auditing Authority, H2A. It is now the end of this symposium. I suggest we meet around drinks, knowing that it's been very hot. We all need a drink now. And I would like to, wish you to see you again next week during our conference next year. Next year.